Let's check the quorum.
Good morning, Chair. There's currently 6 members on the platform, so that's a quorum. Thank you.
Okay. Let's, okay. Good morning, everybody. The meeting is officially open, and welcome back members of the Standing Committee Finance from recess, and also from the oversight program that we had last week to PIC and SARS. We'll keep on having oversight programs to entities that report to National Treasury. So as and when time permits, we'll pick up those entities to visit them and see what they're doing on the ground. We had a very good experience last week of what the PIC and SARS are doing. We are all welcome. Do we have apologies?
Yes, Chair. Apologies from Dr. Burke, Mr. Lekhanyane, Ms. Makubela, and then Ms. Taleka Mazibuko has to leave at 10 to join a physical appropriations meeting. Thanks, Chair.
Okay. Let's record those apologies, and also in absentia, congratulate Honorable Khanyan for having obtained honors degree in public administration from Stellenbosch University, and Honorable Shelley Makuel for obtaining masters in public administration from UWC. Congratulations, colleagues. And let me also welcome, I'm not sure if ever the minister is here or Deputy Minister Dr. Masondo Sorupen are here. If they are in the platform, they are welcome, and I will also request them to make introductory remarks before I allow agencies to present the APPs and Strat plans. And colleagues from all the entities that are here today, you are all welcome. And also the support team, the media, and everybody who's in attendance, and colleagues from National Treasury. Alan, do we have Deputy Minister here, Sarupen or Masondo, before we start with the entities to report?
Sorry, Chair, from my end, I received an apology for Mr. Sarupen. Apologies about that. I'm not sure if Dr. Masondo is on the line. Maybe colleagues from Treasury can confirm.
I don't see him here in the platform. Okay, no problem. So let's proceed to item 2, where we get briefings from the Accounting Standard Board. We're allocating, Alan, is it 15 minutes for presentation?
It's 20 minutes each, Chair.
Oh, it's 20. Okay. So Accounting Standard Board from 9:05 to 9:25. Yeah, we're still on time. ASB, you are welcome. Can you take the platform and share the screen? Thanks.
I'm assuming that everybody can see my screen. Just let me know if that's not the case. A very good morning to all of you, and happy to be back at the committee to share with you what we plan on doing and a little bit of what we have been up to, some new developments on our end. So I'm Janine Podgelini, I'm the CEO of the ASB, and I'll be taking you through the presentation today. Just briefly, a bit about the ASB. Again, I know that you speak to us once a year, but you have quite a long list of entities, so just a short synopsis. Our overall strategy for 2026-2030, our APP, and then key risks and challenges. So about the ASB and our purpose, I'm going to go through two things. The one is our purpose, and then the second part is how we fit into the broader ecosystem with a number of other role players. So if we, So of course you do know that we're a Schedule 3A public entity and how we fit in with the National Treasury. What's important is that the PFMA describes our mandates from Section 88 and Section 89, importantly, prescribes that what we should do and which entities should apply our standards. We issue accounting standards for all government entities, so that's across the spectrum. I'll talk to you about those entities and their states of adoption in the next slide. But because of that process, because we deal with all entities, it really is a robust process that we have to follow to make sure that we can deal with things ranging from, parliamentaries activities to municipalities who have sort of all disciplines within their wheelhouse. So we do need very skilled people, and we do need to be robust in terms of our consultation that we do follow. In terms of what we do, at present, our mandate is limited to issuing accounting standards that outline principles that are meant to be used to prepare the financial statements that will then be audited by the Auditor General. The reason why I'm emphasizing principles is that we don't issue rules. It's a case of accounting is indeed a social science, as many of you will know, which means that answers can differ from one entity to another. If there are good reasons to, but what it really means is that we need very skilled finance professionals across all parts of an organization, from accounting technician level up to CFO and above, to really make sure that the financial statements are credible and relevant in the sector. The principles that we do issue are aimed at ensuring that there is transparency in how revenue, expenses, assets, and liabilities are reported. That's very simply the case. Of course, if you start extending these, there are standards that deal with quite a number of topics. The transparency is meant to ensure that officials can both be held accountable and that users of the financial statements can make decisions, a range of decisions, whether financial, economic, and some social decisions as well. Ultimately, we would like to make sure that this leads to the development of a capable state, to ensure that there is transparency and credibility in government finances, but equally that when users, such as citizens, finances, users of government services, are indeed able to ask the questions and get the answers that they indeed need. If we go to our role in the ecosystem, I think there's a couple of key verbs. So we set the standards, the Treasury supports the implementation, the Auditor General provides assurance on the financial statements, and then Parliament, legislatures, and the municipal councils would then provide oversight over the financial statements that have been audited by the Auditor General. In terms of who applies our standards, this picture is unchanged from the last time that I spoke to you. So there are effectively two key reporting frameworks in the public sector. On the left-hand side, you will see we have the Modified Cash Standard that is prepared and issued by the Accountant General's Office at the National Treasury. That's not us, but it's applied by national and provincial departments at this moment in time. The key dependency for them to move on to accounting standards, it's usually people, policies, and processes, but key to this is really the development and implementation of the IFMS, and the Accountant General's Office and Treasury engages with you on that from time to time. On the accrual accounting side, which is what we issue, the standards of GRAP, At a national level, we have Parliament, public entities, trading entities applying our standards. Provincial, the same idea, except it's the legislatures and provincial public entities, and local government, municipalities and municipal entities. There are certain government business enterprises that do apply IFRS, particularly those that have traded equity. That's the agreement that we have with the JSE. Financial institutions would also apply IFRS. And if entities receive really an insignificant amount of funding from government, they would also apply IFRS. But this position hasn't moved from the last year. And as I said, sort of the key dependency is really around moving national departments and provincial departments onto accrual accounting once IFMS is progressed. If we move on to our strategic and annual plans then, firstly, our key sort of dependency in the National Development Plan is that we develop a capable and ethical state. That's what we aim to contribute towards. Our vision is to strengthen democracy in South Africa through relevant, transparent financial reporting. Our mission is to develop robust financial reporting standards that can be implemented by government so that users of the financial reports can hold government accountable and make sound financial policy and economic decisions. So our vision is expressed in terms of our broader role in the accountability and PFM ecosystem. You would know that organizations prepare a strategy, an annual plan, an annual budget. There's an accounting in the financial statements of the financial transactions and events that have occurred during a reporting period. You would have the non-financial information, the performance information that's prepared, the audit, and then ultimately oversight. Without the financial statements, there's really a key link that would be missing between what was planned and then what was actually done from a financial execution point of view, because that's really the execution of the budget. So if we say that we budgeted R1 for houses, what did we actually achieve? What did we spend and what did we achieve? So that's the key link for us. Our mission is really to make sure that the financial statements are indeed being used and implemented by organizations, but that users, for example, funders and those that rely on government services, are really able to understand what it is that they are getting and to be able to make key decisions about government's finances and policy decisions. So the ultimate success for us as a standard setter would be that citizens will read and engage with the financial statements when they deal with government, and hoping, for example, local government elections coming up, that citizens will indeed engage with the various documents that are published, including the financial statements and how this links to performance information when they indeed decide who they are going to vote for later when we get to the local government elections. In terms of developing our strategy and plan, in developing our strategy, we consult with stakeholders, primarily through our work program that we develop, but we also engage with stakeholders on an ongoing basis, and feedback that we hear about pertinent issues will make its way into our strategy. There are international trends that we need to be aware of. Accounting and reporting is very clearly linked for us to what happens internationally, both at the International Public Sector Accounting Standards Board as well as the International Accounting Standards Board, so the IFRS or IPSAS issuers. That needs to factor into our strategy and plan, because we do base our accounting standards on what happens internationally. We also used the outcome of our end-term monitoring and evaluation assessment to develop our strategy. What we had heard quite a lot of that process is that people do not use the information in the financial statements because they don't necessarily know how to. We also still see, if you have a look at the audit outcomes, that there are still key challenges in the implementation and adoption of the standards, primarily because the financial management system and controls are still weak. But obviously, all of that does need to factor into our strategy and plan, because it doesn't help that we sort of run off and develop best-in-class standards when we are leaving people behind in terms of adoption and application. In terms of developing our APP then, which is at the center, Our annual performance plan, particularly our standard setting activities, is based on our 3-year work program. Our 3-year work program is currently starting it's a new work program for 1 April 2026 to 31 March 2029. It was approved last year after extensive consultation with all of our stakeholders. Everybody that we believed should have had a say in the work program did. It is a public consultation. We would have had various engagements to give people the opportunity to comment on what it is that we should be doing. And we're excited to start off the new 3-year work program this year. The work program for us is really a balancing act between finding or making sure that there is relevant information in the financial statements, which means that we do need to keep abreast of what's happening internationally, particularly from an Ipsos-B's perspective, that we are using the best information or the best principles in financial reporting to make sure that the best information is available to users. But it also means that we can't sort of run ahead. We know that people have resource challenges. Implementing accounting standards is not a cost-free process. Everybody has resources, whether people or systems or processes that they would need to change. So it is really balancing what we think the market needs now versus what we can put off, and then understanding what are the other things that we need to do in terms of making sure that the standards are used and usable. And we have spent quite a lot of our time, and I'll explain this to you in some of our slides going forward, really making sure that while we have relevant accounting standards, we are also making sure that preparers can apply those standards and users of the financial statements can indeed use the information. So both our work program and our annual plan are really a balancing act between those two factors. The one thing that you may have heard of, particularly from a private sector context, is sustainability reporting. And probably you would want to know how we see that fitting into our agenda going forward. So I did say when I started out that the PFMA explains and sets out our mandate. At the moment, it deals specifically with financial statements. It does say that we can do incidental things to enhance financial reporting, but I think us going off and developing a whole new suite of accounting standards or reporting standards for things that are outside of the financial statements would probably be pushing that boundary a little bit too far. So we don't have a mandate at present to issue sustainability reporting standards, but of course we do certain things to support sustainability reporting and the development internationally. We do contribute to those activities as part of our board membership on the International Public Sector Accounting Standards Board, but we don't actually issue any sustainability reporting standards at the moment. That being said, it is something that we are going to have to think about. It is part of the proposed changes to the PFMA. So there is an idea that this would come to the ASB within at least the medium term. And we need to do some work to ensure what direction we are going to take. So there are two key things that we are going to do over the next sort of couple of years. The first thing is to do sort of a state of play report to understand what all the reporting requirements are outside the financial statement. So the annual report per se. We would know that there are international public sector accounting standards or international public sector sustainability reporting standards, apologies. They issued the first one earlier this year. So we need to kind of understand how that would fit with our accounting standards and more importantly with performance information, because I think there is a lot of information on sustainability and SDGs that's already sitting in the performance information. Some entities do report using the Global Reporting Initiative, sustainability standards as well. There is an annual report guide that's published by the National Treasury. There's an integrated report and principles that go along with that that sort of goes into good corporate reporting. That's part of King 5. So there are a number of reporting requirements, I guess, that exist and are being applied by entities in some way, shape, or form. But I think what we really need to do to make decisions about where we take this is to take stock and understand who's applying what Where are the gaps? What intersects and overlaps? Because I think our board is quite conscious about not just issuing new reporting requirements for the sake of having new reporting requirements. I think it must be that it's really going to add value to the market and to the users of the financial statements. We can't just have more information, it must be relevant information. The other thing that we are going to do is you would probably see yourselves sitting in an oversight structure where you don't necessarily get a good feel of I want to say like a clear line of sight reporting between the strategy, the plan, the budget, the financial statements, and the performance information. We know that all of those documents get published, but there isn't really anything that brings it all together. And I think that's the part that is missing, particularly for citizens. That's the thing that's really going to be useful for people if they can really see how we got, sort of R1 million to achieve X, we spent this, we achieved this, and really we are focusing more then on delivery rather than just pure spending. In terms of the outputs that we have, as I said, I'm not going to go through all of them. These are really the 4 key ones, but we developed these after our end term evaluation as part of our last strategic plan, which ended in 2025. And again, what really came out of this is that there's a lack of understanding about the role of financial statements, how the financial statements can be used to hold entities accountable, and then what decisions can be taken. So in terms of the outputs that we have, as I said, our mandate is pretty clear in law what it is that we need to do. But how we go about doing that and how we go about ensuring that we're more effective, of course, can change. And that's resulted in the third output, which is promoting a culture of learning with preparers and users of the financial statements. And you'll see this coming through quite strongly in our strategic plan for this particular period. We really want to make sure that the standards are being applied appropriately, consistently, comparably, and that the users are indeed understanding what they are getting and making the appropriate decisions. For the other outputs, maintaining and enhancing existing standards of GRAP, that's really our key standard setting activities in terms of issuing new standards, issuing guidelines, directives, etc. We also do reviews of our standards to assess their implementation and how they are being applied by entities. This gives us an opportunity both to assess whether or not we need to make changes to the standards, but also to inform preparers if we feel that there are areas or deficiencies in how the standards are being applied and then how those can be improved. Another key output for us is number 2, which is influencing and collaborating with stakeholders both here and internationally. I did say that we benchmark our standards to IPSAS, International Public Sector Accounting Standards, which means that we need to have a seat at the table. So a key factor for us is an ongoing membership with the IPSAS-B. It's a voted position, it's a nominated position. We've been on the IPSAS-B ever since its establishment, as well as its predecessor. So we have a long history of being involved in standard setting internationally. It does take up quite a lot of our time and our resources. The chairman of our board and our head of technical both contribute to that process. The other ones I'm not going to go through. I think the other one is raising the profile of the ASB, but that's more about creating awareness about who we are and what we do, which of course is important because it's something that people don't know. I'm not going to go through the highlights of the APP just in the interest of time. I think members can have a look at that. What I really want to focus on is our resources in terms of people and then our funding. If we have a look at our people, we have 7 staff members. We are an all-female team. We have 5 professionally qualified accountants and 2 support staff, also qualified, just not professionals. The one is working her way towards that. We do need an additional standard setter to deal with all the work that we have on our plate, whether it's, finding a way forward on sustainability reporting or just supporting our initiatives really to promote a culture of learning. It is important that we have an additional person. From a board perspective, we can have a maximum of 8 independent board members. We have 6 at the moment, so we do have 2 vacancies. We are in the process with the Minister of Finance to have those 2 vacancies filled. And then we have the Accountant General who is on our board and a representative of the AGSA. I include stakeholders in this because they really support the development of standards of GRAP. It's critical that they are involved from the start to really when we are reviewing the standards, and we have a good cooperation and support from the National Treasury, from the AGSA, professional accounting bodies, and then others such as consultants, auditors, academia, etc., that are involved in our various processes. And without their contributions, we really wouldn't have credible standards. If we have a look at our budget, we are, the 17 is indeed 17 million, so it's not a very big number that we have. In terms of the composition, 71% goes to employee costs, and that's really as a result of we're a policy-led organization. You would expect that. We don't provide services, the people, and what we do is the service offering that we do indeed have. We operate in a completely virtual environment. We don't have an office. So if you want to visit us, we'll have to make arrangements to visit you at the Treasury's office. But what that does mean is that a lot of our operating costs go towards ICT support. The other things that go in there are sort of licensing of the international standards that we do use. And I would say those are the two sort of key contributors to that. The risk factors that we have is firstly, that the standards aren't implemented, and this could be for two reasons. The one is delays in approving the effective dates of the standards, and the second part is that based on the slide that I showed you earlier, there are still entities that do not apply our standards. The delays in the approving of the effective date of the standard, I think this historically has taken quite a long period of time. The process is that because the standards are law, the Minister of Finance needs to approve their application, which includes a process that needs to be followed. Sometimes it's taken about 3 years or so to get to the effective date, but what it really means is that entities are not giving the most relevant information or the newest information to users of the financial statements. We have agreed or tried to streamline the process with the Office of the Accountant General, so I hope that that will start working better in future. In terms of the other risk factor, that we have insufficient resources, I think we have touched on that and explained exactly what it is that we would need additional people for, particularly when it comes to focusing on sustainability reporting, or even at the moment, understanding what the sustainability reporting landscape looks like requires people. What it means is that we can do work there, of course, but then we need to reduce activities in other areas. In terms of us being an organization, not everything that we do is reflected on our APP. We are a stakeholder-centric organization, which means that a lot of what we do can't necessarily be captured in numbers on the APP. So we do a lot of outreach, we do a lot of communication, we have a lot of workshops, events, etc., that you wouldn't necessarily see on the APP, but absolutely critical to standards development, and then making sure that they are effective and that we are being effective in our standard setting process. So we have increased cooperation and collaboration with the Office of the Accountant General over the last couple of years. And this really means that, between our 7 people and the limited number of people again at the Accountant General's office, if we work together, we can really make a difference in terms of building a capable and ethical state. And that collaboration and cooperation is critical. The Knowledge Hub that we have issued, this is the one-stop shop for GRAP, as we like to call it. It's collaboration with the Office of the Accountant General. Anything that you need related to the standards, guides, support, a forum to ask questions, etc., you can access it by scanning this QR code. Importantly, what we have started doing through our Promoting a Culture of Learning is recording content for YouTube on various accounting issues. These are issues that stakeholders raise with us. It might be trends that we see emerging in the economy, and it's there, it's available, it's free to all. The videos are not very long, so really available to anybody that might have questions related to GRAP. And the last thing that I just wanted to mention, and this is something new for us, is I have mentioned quite a lot that we don't think that users of the financial statements necessarily use the financial statements because they might not understand what they are seeing or what they need to do with it. This is new. We've completed this in April. It's called the Citizen's Guide to Understanding Government Financial Statements. You can just click on the link here, or you can, this is the web address. But essentially, if you're sitting in council or in parliament and you need to understand what you are seeing, we've tried to make it quite visual, that you can sort of navigate through financial statements and get a good idea of what this line item might mean, what the kinds of decisions are. It gives you citizens tips that you can really be engaged in what you are seeing from a financial statement perspective. We still need to do a formal launch. As I said, this is really hot off the press. We finished it ago.
Janine, can you
Yes.
please summarize? You have
Sure.
gone beyond 20 minutes.
Sure. This is my last slide. So just to say that we are going to roll this out now in this year, and we will be considering a phase 2. And I think because we are looking at oversight structures and citizens to have a look and use this information, we would really be happy to get any feedback from you about this. And that is indeed my last slide. Thank you, Chair.
Thanks, Janine, for the presentation from ASB. FAIS Ombud, over to you, 20 minutes. Please time yourself.
Thank you, Chair. Don't worry, I'm going to be very quick, I think, as usual, so needn't worry about that. Just going to share my screen quickly. Okay. Right. Thank you, honourable members. I assume everyone can see my screen. Yeah, so I'm the Ombud for financial services providers. Just a quick recap again of what we do in terms of our mandate. So in essence, we adjudicate disputes between consumers and their financial advisors. We also deal with funeral policy providers and any disputes in terms of that. Obviously, funeral policies are the most common type of policy issued in South Africa. So that is the majority of complaints we deal with involve funeral policies. And we use dispute resolution methods such as mediation, conciliation, and recommendations. As a last resort, I can issue a determination, which has the status of a civil court judgment. However, I don't do that very often. I try and avoid that. Right. In terms of our strategic plan, it aligns with government, as always. It covers the period 2025 to 2030. We obviously look at driving inclusive growth and job creation, reducing poverty, tackling the high costs of living, and building a capable and ethical developmental state. We also align it with the 5-year NDP, job creation, youth employment, gender equality, innovation through technology, and transformation. In terms of our alignment, more specific, obviously peripherally we deal with all those aspects as best we can, but we specifically employ graduates in terms of our graduate program and workplace skills development. So we employ as many as we possibly can to try and train them up and work with us, and then we actually hire them afterwards quite often. So they will have built up experience, and then we can actually hire somebody if we have an opening, and that's worked quite well. And we do it in our HR department, IT, dispute resolution, and in finance. So we do it across the board. So we're able to hire a spectrum of graduates in that regard. And obviously, we apply gender equality and transformation in our hiring practices, as with any government organization. Right. In terms of the aspects that we took into account for our strategic plan and the strategy and risks that going forward, we're obviously COFI, that is before Parliament at the moment, will have a significant impact on our jurisdiction. We obviously look at unfavorable economic conditions, especially now, obviously. People who are under pressure, consumers under pressure, are drawn to unregulated investments and scams and Ponzi schemes, and that's ongoing, and it's obviously a high level of danger in terms of those type of investment products. So that's something we have to keep in mind. Low levels of consumer financial literacy. People don't understand the products that they're sold or that are being advertised. So that's something we try and sort of educate consumers on. Cybercrime, always a potential problem, especially these days, obviously in terms of access to personal information we hold. So we have to be very careful about our IT systems. As always, the future amalgamation of our office into the NFO is constantly there. The COFI bill will be the start of that sort of movement. And over the next few years, we see a development in terms of us amalgamating into the NFO. In terms of strengths, weaknesses, the SWOT analysis, yes, we have a clear legislative mandate. We're independent. We can issue determinations. We have an excellent reputation. So that's all very good. We collaborate with the Ombud Council very well, the FSCA and industry associations. So that's all very good. Obviously, we have challenges recruiting specialized staff and staff uncertainty due to the amalgamation. What's going to happen to the office? So obviously that is a concern, or a challenge rather, when we hire staff and we're advertising. Also, our office is unionized, so that obviously presents its own challenges and opportunities, of course. Right. In terms of measuring our performance, it falls under four broad sort of spectrums, whereby consumer satisfaction surveys is one aspect that we use to measure. We want to support department of the support for the department operations and services targets, stakeholder engagements, and then brand awareness and consumer financial literacy targets. These are broad sort of ways we want to try and measure our performance and make sure that we're doing what we're supposed to. So we have core mandate targets, which we use consumer satisfaction surveys. We measure case closure times and our efficiency ratios to make sure that we're doing what we're supposed to do. We look at achieving clean audits and paying invoices within 30 days. Then we're looking at stakeholder engagements with the union, the governance committee meetings, and audits, obviously, engagements. Looking at brand awareness, media releases, social media posts, and newsletters, trying to get the word across, trying to get information across to consumers and the financial industry. Right, key risks that we have, obviously, as I said, cybersecurity is a major one. Always fraud and corruption within the public sector is a high risk. Business continuity in terms of disaster. What do we do if there's a disaster? Disruption and failure of critical infrastructure, third-party service providers. Obviously, an amalgamation risk, as I've mentioned. Change management risk. Again, how do we manage that? That is a major risk for us. Compliance risk, making sure we submit all our reports and submissions on time and accurately. Funding, obviously, that's always a risk. Will the financial services providers pay their levies? And the level of possible bad debt. So those are aspects we must keep in mind. Reputational risk, are decisions of excellent quality, clear, understandable, and uniformly applicable. That's obviously something we must always keep in mind. And then, are we visible enough? Do the people in the rural areas know about us? That is obviously something we always keep in mind and aim towards in terms of risk. Right, in terms of our performance plan targets, incorporating all those strategic aims, the way we measure it, we have 22 targets. So obviously always a unqualified audit opinion or clean audit, always aiming for that, paying 100% of the supplier invoices. We want 51% female staff, 92% black staff, and 2% employees with disabilities. We want at least 9 trainees appointed. We want to achieve at least 85% satisfaction rate from consumers who rate us. We want to respond to all complaints within at least 4 days of the date of receipt of the complaint. We want to close at least 92% within 9 months. We want to close at least 85% within 6 months. We want to close at least 75% of all our cases within 3 months, and we want 20% or less of our active complaints must be older than 9 months. We also want an 80% efficiency ratio. That's comparing the number of cases we receive to the number of cases we close. We want to submit all our submissions to National Treasury as required. We want to have all 8 governance committee meetings. We want at least 4 union engagement meetings a year, at least 4 internal audits, at least 1 external audit by the AG, of course. We want to participate in at least the Money Smart Week every year. And then we want at least 100 posts on social media. We want to issue at least 1 press release a month and issue at least 4 newsletters during the year. And that's it. Obviously afterwards, I'm available for any questions. Thank you, Chair. Thank you, honourable members.
Thanks for the presentation from FAIS Ombud, and also for keeping to time allocated. The next presentation comes from the Ombud Council. Over to you, 20 minutes.
Good morning, Chair, and to the honourable members. We appreciate the opportunity to be here. My name is Leanne Jackson. I'm the Chief Ombud and CEO of the Ombud Council, and I'm joined on the platform by my executive team. If we could please just go to slideshow view on the slides. Thank you very much. Let's get started. As with the other entities, I'll start with a brief recap of our mandate, which the Ombud Council is established by the Financial Sector Regulation Act. And broadly speaking, our job is to make sure that financial customers have access to effective alternative dispute resolution through the Ombud system when they have complaints about financial institutions, products and services that they deal with. To achieve this mandate, we have a comprehensive suite of regulatory, supervisory, and enforcement powers. Important to note, of course, those powers apply in relation to ombuds and ombud schemes and not in relation to financial institutions themselves, but they include monitoring the performance of the schemes, granting recognition to industry schemes, and overseeing and approving their governing rules, promoting coordination and cooperation between the different schemes and ensuring that their jurisdictions are streamlined. And an area we've placed particular focus on and continue to place focus on is promoting awareness of and publicizing ombud schemes and the services they provide, which we see as a vital underpin to supporting financial consumer protection and inclusion. You can go to the next slide. We oversee 4 ombud schemes. There are 2 statutory ombud schemes, the FAIS Ombud, whom you've just heard of, and the Pension Funds Adjudicator, who you'll hear from shortly. And we also oversee 2 industry ombud schemes, the main one of those being the National Financial Ombud Scheme, which was established 2 years ago as an amalgamation of 4 previous schemes and cover the full range of banking, credit, and all forms of life and non-life insurance related complaints. There is a 4th small focused scheme, the JSE Ombud Scheme, which deals specifically with complaints against JSE members. If we move on. I think important to bear in mind is that since its inception, the Ombud Council has operated against a background of reform of the Ombud system, and we actively work with the National Treasury in supporting the ongoing developments and implementation of these reforms. The current situation, which is the 2nd column on this graphic, is as I've just described, is the Ombud Council overseeing 4 schemes, 2 of those, the blue ones being the statutory schemes and the yellow ones being the 2 industry schemes. But in line with the policy paper that the National Treasury published 2 years ago called A Simpler, Stronger Financial Sector Ombud System, the next step, which we are hopeful will occur during the current 5-year administration period, is further consolidation of the system, so that the FAIS Ombud, again, as you've just heard from Advocate Simpson, will merge into the NFO and form a newer, broader National Financial Ombud, whereas the Pension Funds Adjudicator, to be renamed the Retirement Fund Ombud, will in the medium term continue to operate alongside the NFO as a separate statutory forum. So this context is just important to understand some of the focus areas of our strategic plan. We can move on. I also just wanted to pause briefly to talk about where the Ombud Council fits into the broader financial consumer protection framework, because there is in fact still some stakeholder confusion as to the exact nature of our role. We see ourselves as a very important underpin to the work of other key stakeholders in the consumer protection ecosystem, but our role is a separate and distinct one from the others. I think notably, our role needs to be distinguished from that of the Financial Sector Conduct Authority. We have similar regulation, oversight, and enforcement powers to the FSCA, but of course they are a significantly larger institution with a much broader remit, and they oversee financial institutions themselves, but they do not have oversight over Ombud schemes. So the FSCA will investigate contraventions, systemic misconduct by financial institutions, but they will typically not involve themselves in consumer complaints, specific contractual disputes. These they will refer to the Ombud schemes that the Ombud Council oversees. And I think this is important. The committee will have experienced incidents where consumers approach yourselves when they remain dissatisfied with their attempts at obtaining recourse through other structures. And I think it's therefore important to just understand, sometimes they approach the FSCA believing the FSCA should resolve their dispute, or if they have approached an Ombud, they will sometimes, and they are dissatisfied with the outcome, they will sometimes think that the FSCA is the entity to approach in that regard. Whereas that is not the case. The relevant oversight authority over the Ombud schemes is the Ombud Council. Moving then to the other conduct regulator that's relevant in the Ombud space is the National Credit Regulator, who is responsible, has similar powers to the FSCA, but in relation to credit providers, again, not in relation to Ombud schemes. Somewhat differently from the FSCA, however, the National Credit Regulator does have a specific consumer complaint handling mandate. In practice, however, the NCR has entered into an MOU with the National Financial Ombud Scheme, and complaints against credit providers who are members of the NFO, which is all the banks and almost all of the large credit providers, those complaints will be referred by the NCR to the National Financial Ombud. If we can move to the next slide. And of course, the key participants in the Ombud system are the Ombud schemes themselves, and these are the entities that deal directly with the consumer complaints against the financial institutions as per their respective sectoral jurisdictions, after giving the financial institution the opportunity to resolve the complaint first. I think people are not always aware that Ombud schemes are obliged to report material contraventions or systemic misconduct that they do encounter when they are handling a complaint to the FSCA. So although the schemes do not have their own enforcement powers against financial institutions, they do participate in the overall detection of systemic misconduct and contraventions through this reporting obligation to the FSCA and through general information sharing of complaint statistics and trends. Also important to understand what the recourse or what the next step is for a consumer or a financial institution, for that matter, who is not happy with the decision of an Ombud scheme. In the case of the statutory schemes, the aggrieved party can approach the Financial Services Tribunal to have a scheme's determination reviewed. In the case of the industry Ombud scheme, the NFO, it has its own appeal tribunal, which is run by a panel of retired independent judges. If we can move on. The Ombud Council, of course, I have already described the mandate of the Ombud Council, and that mandate does include monitoring and reporting to the Minister of Finance, the Treasury, and the financial sector regulators of complaint trends and conduct of the financial institutions that gives rise to complaints. And I'll come back to how we're planning around that role. But what we do not do is deal directly with consumer complaints against financial institutions. And it's also important to understand that we do not act as an appeal forum on the merits of any Ombud decisions. And this would be contrary to our responsibility to protect the independence of Ombud schemes. So we cannot involve ourselves in individual decisions, and we do not have any jurisdiction over financial institutions themselves. This is the role of the FSCA, or in the case of credit, the NCR. What we will, however, do is where we receive a complaint that an Ombud has not followed its governing rules or has rendered materially poor service or has in some other form seriously misconducted itself, we will and do investigate those complaints, and should it become necessary, and I'm pleased to say it has not become necessary to date, but we do have the power to take enforcement action against a scheme or an Ombud in the event of such a contravention. If we move on. Shifting then to our programs and strategic priorities. We are in the second year of our first full 5-year strategic planning horizon. Our strategic priorities, which have been shared with this committee before, have not changed. We have 3 programs, 3 of each linked to a key strategic priority. Our first administration program its task is to maintain a well-governed and effective Ombud Council that delivers on its mandate. This is the internally focused program. And then our 2 key externally focused programs relate to our consumer awareness and education mandate. And I think important to emphasize here that our approach to this mandate is a collaborative one whereby we work within the broader financial sector education framework, collaborating with other stakeholders to promote awareness of the Ombud system and partner with their consumer education initiatives to add the Ombud-related elements to that education. And then our third key focus area is the Ombud system reform that I mentioned earlier, about participating in the reform and future direction of the financial Ombud system and leveraging our existing legislative toolkit to continue promoting coordination as we move towards the more consolidated system. Jumping ahead then to just summarized our key APP targets for the coming period. In our first program, the administration one, we are proud of a record of clean audits in the few years since our inception, so we wish to maintain that. We've undertaken to implement all internal audit recommendations we receive. We have a board-approved, fully integrated governance, risk and compliance framework, and we would continue to manage our risks demonstrably in terms of that framework. And we also have human resources commitments in respect of ensuring proper performance management systems are in place, training and development is in place. Related to that, we will intend to appoint 2 interns this year, and we have employment equity targets. Moving to the next program, consumer awareness and education. What we are going to be doing this year is to develop and publish a baseline measure to determine the extent of consumer awareness and usage of the Ombud system, to enable informed and evidence-based identification of gaps in awareness of the system so that we can inform future awareness and education initiatives. I think this is important. Many entities work very hard in the consumer education space, but you need to know what the baseline is in order to be able to measure success. And to the best of our knowledge, such an analysis has not been done in relation to the Ombud system and Ombud usage in particular. So that is a flagship project we targeting for this year. We will continue to deliver consumer education materials and awareness, as I mentioned, and we have this year set ourselves specific sub-targets focused on such initiatives in relation to women, youth, and people with disabilities, and also setting ourselves targets for broader geographies specific geographies across the country, particularly with a view to areas that are traditionally underserved by the Ombud system. We also intend to host a conference, our inaugural conference for Ombud system stakeholders in the course of this year to broaden awareness and understanding of the Ombud system. If we can move on. The third program, which as I mentioned, is the focus on the reform of the Ombud system. I think what the key focus here is to say it's one thing to analyze complaints data and understand the cause of the complaints, but to really drill deeper and understand what are the actual conduct risks that this data is revealing, and therefore enabling us to work together, share this information with the regulators and work together to mitigate unfair customer outcomes. So really using the very valuable insights from the Ombud system to enable the regulators to take action aligned with their fair treatment work. And I've just cited a couple of examples from the previous year of the type of work that has been done here. Is, for instance, we've worked together with the NFO to share data and insights in relation to digital banking fraud to support the FSCA's efforts in that space. We've done a similar exercise with the National Credit Regulator using NFO information to help the National Credit Regulator take action in respect of unlawful debt counselling activities and to address the impacts of debt counselling. Just to note here that debt counselling is an activity that actually falls outside the jurisdiction of the NFO because it falls outside the scope of a financial service under the Financial Sector Regulation Act, and it is therefore solely can only be dealt with by a National Credit Regulator. But nonetheless, we feel it's important because the NFO gets a large number of complaints around this activity, notwithstanding the fact that it doesn't have jurisdiction. So instead of sitting on their hands, we've worked together with the NFO to say how can we nonetheless share this information with the NCR. And then a third example over the past year has been to facilitate more structured and intentional engagements between the FSCA and the FAIS Ombud to share information to assist the FSCA in taking enforcement action in relation to intermediary misconduct. If we can move on. Still with Program 3, the reform, as mentioned before, we continue to work together with the National Treasury in helping to drive this reform. So this includes working on a dedicated financial sector ombud system amendment bill. Once the COFI bill is enacted, this bill we are hopeful will follow to focus specifically on amendments necessary to reform the ombud system. And this will include an appropriate approach for transferring the functions of the current FAIS Ombud to a future overarching Ombud scheme. We also continue to work constantly on improving alignment and coordination of Ombud scheme complaint handling processes to the extent appropriate. I mean, the schemes do have operate in different contexts, so they cannot have identical complaint handling processes, but wherever alignment and coordination makes sense, we are intentionally supporting that through action plans. Next slide. This slide just links the strategic outcomes I've outlined to the broader national priorities, and as you will see, the internal focus is in support of building a capable and ethical state, whereas the external focus is in support of broader inclusive growth and supporting financial inclusion and social protection. If we can move on. I won't spend time on these slides. These are the detail of the initiatives I've outlined, and the specific targets. But if we can jump ahead, please. Skip the next slide. And the next one. And lastly, I think this is my final slide. This is the annual budget. A very brief snapshot of our budget. Our total budget is just under 30 million rand, which comes from levy income. The Ombud Council has a fixed levy formula. Our levy amount is 2.5% of the total levies payable to the FSCA. And the expense distribution is targeted here. primarily the biggest chunk of our expenses are our employee costs. We are a people-driven service entity. We don't produce actual products or processes, so our infrastructure needs are relatively limited. But as you will also see from the slide, what we don't spend on our people and operating expenses is focused on about approximately just under a third of our budget we intend to spend on the consumer education and awareness initiatives. I think that might be the last slide if we move on. Oh, just to highlight, our structure is complete. 8 people is the total of our current capacity. We do outsource some support services because the scale of our operations does not justify full-time resources for certain functions. But this is the team, and as I say, the 3 heads are on the platform with me, and we appreciate the opportunity to present our plan. Thank you very much, Chair and the members.
Thanks, Ombud Council. Pension Funds Adjudicator, PFA, over to you.
Morning, members of the committee. Greet you all. I am Lebogang Mohasho. I'm the new Pension Funds Adjudicator, having assumed office on 8 December. I think you'll have previously met my predecessor, but I'm the new Pension Funds Adjudicator, and I will be taking you through our APP and the strategy today. Chair, I'm trying to share my screen, and it says that, okay, now I see it. I'm just going to share, hoping that you can see my presentation. So, Chair, as I said, I've already introduced myself, but I do want to, my presentation is essentially divided into 2 sections, and I want to rush through the first section so I can focus more on the complex operating environment we're in and what it means for our strategy and key performance indicators. So in the first section, I'm really just looking at our mandate and also reflecting on our performance to date. So by way of introduction, the PFA is an agency of government, or a statutory ombud that was established in terms of the Pension Funds Act with a mandate to investigate and resolve complaints that relate to the administration of retirement funds, the interpretation and application of their rules and the law, and the investment of their assets. We are mandated by law to ensure that we investigate these complaints and resolve them in a procedurally fair manner. That means that we have to follow due process. We do that in an economic manner, which means that, for example, we leave this through our services to the public being free, and do so in an expeditious manner. One of the defining features of an Ombud office is the speed of resolution of complaints, and that's absolutely crucial for us. So we have to make sure that we resolve complaints in an expeditious or quick manner. Moving on to the next slide, Chair, we do have certain jurisdictional limitations, so it's not everything that relates to pensions that we have jurisdiction to investigate or deal with. Firstly, we don't have jurisdiction over funds such as the GPF, Transnet Pension Fund, and the South African Post Office Pension Fund. Although I do hasten to add that the coffee, which you will have had in some of the presentation, the coffee bill might change this, and they might actually come under the main regulatory framework under the Pension Funds Act, which would mean that we would then acquire jurisdiction over them. We don't have jurisdiction over SASSA or state pension grants. We are not allowed by law to investigate complaints if what a person is complaining about arose more than 3 years before the complaint was received by the adjudicator. And where employers are in business rescue, there's a moratorium on all claims in terms of the Companies Act. So we would usually not investigate those matters. Matters that are already pending or finalized by civil courts, we will not investigate that in order to prevent forum shopping. Issues relating to surplus, past surplus in terms of Section 15B. Important to note that this doesn't mean we don't have jurisdiction over anything that has to do with surplus. Where it's 15C surplus, we have jurisdiction, but 15B, we do not have jurisdiction. And as the other presenters will have pointed out, we do not have authority to then enforce the orders that we make. From a governance perspective, we're 3A public entity. The Minister of Finance is the executive authority. I am the accounting authority for the organization, and my CFO is the accounting officer delegated by myself. And we have committees that then assist me in overseeing the governance of the organization. In terms of how we contribute to government priorities, Chair, we contribute to all those three priorities, mainly reducing poverty in the sense that by disposing of complaints, we ensure that the pension system works as intended. And the aim of the pension system is really to provide a poverty safety net so that when people stop working, they do not then fall into the clutches of poverty. So we help ensure that the system works as intended. We contribute to inclusion in economic growth through making sure that we run programs that inform stakeholders about the work that we do, the financial system as a whole, so that they can feel included and participate in this financial system. And we also contribute to a capable ethical and developmental state in executing our mandate with excellence. Just a quick reflection on performance, Chair. I'll come back to this information because it's the main feature of my presentation. But in essence, what I'm showing on the screen is the number of complaints we've received in the last 10 years. And as you can see, in the recently concluded financial year that ended on 31 March 2026, we received 13,041 complaints. This organization has never in its life received that many complaints. That's a record, and I'll come back to why it is so crucial for our strategy going forward. But again, digital channels, how we receive complaints. This slide shows you how we receive complaints. You'll see that digital channels are very popular, but still popular is the walk-in method of lodging complaints, which tells us that the country or people would benefit from us having physical presence in not just in Gauteng, but outside the province as well. In terms of complaints finalized, Chair, I've just given you stats for the last 10 years. But as you can see, we are closing the majority of our cases within 6 months. And in the recently concluded financial year, we closed about 91% of of cases that were investigated and finalized within a period of 6 months. Chair, having said that, I think that's a nice success story for the office for the last decade. But we are mindful that we operate in a complex operating environment, and that's putting pressure on our planning. One of the most important developments that we're seeing that's also driving complaints is the weak economic environment. And it's driving complaints in a number of ways, or it's affecting our planning in a number of ways. If you think about it, when the economic environment is difficult, you see more job losses, and therefore people then have to resort to their pension funds. They're asking for more withdrawals, and because something is bound to go wrong with the processing of claims, etc., you're going to see more complaints for my office. But also equally, when the economy is difficult, households come under financial pressure, and people are looking to withdraw two-pot from their two-pot, and you'll see more complaints as a result of that. Again, weak economic environment might drive poor investment returns, and you're going to see that in complaints before the adjudicator. And again, job losses, we need to remember how the adjudicator is funded. We're funded through levies that are based on the number of retirement fund members. So when people lose jobs, there might be a reduction in membership, certainly for the period before the two-pot system. And that might then place pressure on the levies because we'd be collecting from less members than what we would ordinarily do. So this is very important. It's driving complaints. And I think that 13,000 complaints that we've received is in part attributable to that. But also what we're seeing is a Section 13A crisis. What this means essentially is that we're seeing this prevalent practice of some employers, especially in the private security sector, contract cleaning, but also now increasingly in the local government space. Contributions are deducted from employee salaries, but they're not paid over to retirement funds, which is something that that cannot be accepted, but it accounts for a huge bulk of the matters that we finalized last year. I did mention that we closed 91% of our matters within 6 months. But the other interesting stat is that about 51% of the matters that we finalized in the last financial year actually related to this phenomenon of deductions being made from employee salaries and not paid over to retirement funds. Chair, from a legal perspective, COFI is going to impact the way we operate in a big way. And we're monitoring that. New conduct standards that are being published are going to result in new types of complaints that's affecting our planning. Two-pot contributes to complaint directly and indirectly, in the sense that directly people complain about two-pot payments, but also indirectly, because of two-pot, people realize that their employers have not been paying contributions, and that's affecting our work as well. The Ombud Council has spoken about the twin Ombud reform system that is on the table at the moment, and also from time to time, or recently, they've issued Ombud Council rules that regulate how we conduct our investigations. Technology presenting opportunities, but also risks for us. But also, I think one of the key explainers of the large volume of complaints that we're getting is that it seems people are more and more informed about their rights, and they are more aware of the Ombud system, and therefore we're going to see a lot of complaints. So what we're seeing is that, as I said, a 26% increase from last year in terms of complaints. And if you look at the average for the last 10 years of 9,600, the complaints that we received in the recently concluded financial year, about 34% increase, which is quite material. And we just need to realize that this is placing a lot of pressure on our resources. We gave an example there. If you look at 2010 financial year, we received about 6,200 complaints, and we had a staff complement of about 56. But this year, over 13,000 complaints, we have a staff complement of about 84%. And if you compare the growth in complaints versus the growth in staff has grown by about 50%, which mainly is support functions in the organization, and not necessarily the people who do the core business of investigation. And complaints have increased by about 111%, which should tell you about the pressure that the organization is facing. So with that complex operating environment, our strategic intent is to build trust in the system and build confidence in the retirement fund system through efficient, impartial, and transparent adjudication of complaints. And in order to support this strategic intent for the 2025-2030 financial year, we have 4 strategic priorities. The one being disposal of complaints in line with our mandate. That's a non-negotiable. We have to do that. But we also want to raise awareness of the PFA and improve accessibility. I spoke about expanding our physical footprint. We want to position the PFA as an employer of choice, because the work that we do is very specialized, and we need certain specialized skills. And we need to position ourselves to compete in the market to attract that kind of talent. We also, non-negotiable for us as a public entity, good governance and clean administration. So now I'm going to get into the individual KPIs. One, as I said, we want to dispose of complaints in a procedural, expeditious manner. And we have specific targets there around how quickly we acknowledge complaints. We want to make sure that in 95% of the cases, we acknowledge complaints within the time we've set for ourselves. Again, where we give parties an opportunity to resolve the complaints directly with between each other, we want to make sure that we refer those matters to them within 5 days, and we want to do that 95% of the time. Where that effort does not succeed, in other words, where the parties cannot resolve the dispute between themselves, then we want to be able to initiate an investigation within 5 working days, and we're targeting 90% of the time we want to do that. Crucially, Chair, the number of complaints that we investigate and finalize, we want to make sure that we close 80% of our cases within a period of 6 months. And this is crucial. I want to dwell a bit on this because in the last financial year, this target was about 90%. And now it's 80%, and it's driven largely by the pressure in terms of the influx of complaints that we're seeing, the pressure that we're seeing on resources. And we just need to make sure that we strive to do what we can with the resources that we have. But there's also work that we're doing in a parallel process to make sure that we relook at our processes, optimize them, and see where we can unlock efficiencies. But for this year, that target is going to be 80%. But even with this 80%, we think, given the influx of complaints that we're facing, 13,000 complaints, that's a very high number. And we have no reason to believe that it's going to taper off or drop at some point. But we want to make sure that we can resolve at least 80% of those cases. And we think that because given the numbers of complaints that we're seeing, we are likely to close more complaints even with that 80% than we did in the last financial years. Our rulings can be taken on appeal or can be challenged before the FST for reconsideration. We want to make sure that those that are remitted to us or that are set aside by the FST do not exceed 1%, and that confirms or will confirm the jurisprudential integrity of our office, which is crucial for an Ombud office. We also want to close complaints that can be resolved early within a period of 90 days. So we've set ourselves a target of 95%. And when a matter can be closed, we want to close it within 2 days, and we want to do that 95% of the time at least. From a systems perspective, this is crucial because this is how our people reach us and access our services. We want to make sure that the uptime of our critical systems is 95%. We're also developing a digitalization strategy for the PFA, which is looking at optimizing and digitizing our processes. And we have certain activities that we plan to implement based on that strategy, and we want to be able to implement about 80% of those activities. We also, as I said, we want to make sure that the PFA is more visible, that we are seen by people who need our services, and therefore we want to implement about 95% of the activities that we plan in our stakeholder engagement plan. And we also conduct an overall external stakeholder satisfaction survey, and we're setting ourselves a target of 74%, which is quite high given where the market and other competitors are sitting. So 74% is an ambitious target for us. As I said, we want to attract and retain qualified and skilled workforce, and we have a program to improve employee wellness. We want to implement 90% of that. We're aiming for a 70% score from an employee engagement survey perspective. And from a employee climate survey perspective, we're also aiming for 70%. From an employment equity perspective, there are specific targets for us as an institution, given our sector, and we want to make sure that we meet the targets that are in that code that applies to us. I spoke about maintaining clean administration and governance, and here we are looking for an unqualified audit opinion, which we feel is non-negotiable given the nature of the organization as a public entity, and we are aiming to pay supply invoices within 30 days. So, Chair, that's my presentation. I think that was my last slide. In essence, the key message or the golden thread of my presentation is that we've had great success in the last decade. Certainly, as a new person joining the organization is in a healthy state, and it's a year of transition, but that year of transition has coincided with certain things in the operating environment that are making things very difficult. And one of those is the high number of complaints that we're seeing and the pressure on the resources that we're seeing. But we also want to assure the House that we are doing what we can. We're exploring options that are available to us to optimize processes and unlock more efficiencies so we can rise to the occasion in dealing with the increased number of complaints. Let me leave it there. I'll take questions. Thank you, Chair.
Thank you, Mr. Mohasho. Congratulations for your appointment, and you are welcome to the bigger finance family. Thanks very much. And then let's move. Okay, let's take questions and comments on the presentations so far, on the 4 presentations. Honorable Des, Honorable Alexander, Honorable Van Rooyen, over to you.
Okay, thank you very much, Chairperson. Good morning to yourself and, of course, all members and officials from various entities in attendance. I got just 2 submissions that I wanted to make at the inception of these presentations. The first is the general comment to all presenters, or maybe I should also start by welcoming all presentation made so far. My issue, Chair, is on transformation of the financial sector, which is just a general comment. Of course, maybe some presenters might want to or might not to comment to my observation, which I think is a commonly accepted observation that the transformation of the financial sector is moving at a very snail pace. I mean, in our South African situation. Now, my question is, it will be interesting to know how these institutions are accommodating this sad reality, or maybe incorporating it into their respective mandate. It will be very interesting because it's not coming out clear to me as to do they have any responsibility towards assisting the country in terms of addressing this unfortunate reality. And my last question is to FAIS Ombud. He correctly stated that I mean that it continues to be a perennial problem, the issue of reaching out to underserved communities. A reference was made to rural communities. But when you look into the targets, not unless it's not one of the key targets, it's not cited as to how the institution intends to deal with this particular challenge of reaching out to the underserved constituencies in the country. Maybe if they can shed some light, how are they intending to deal with this in their the annual plan target? Thank you, Chair.
Thanks, Honorable Van Rijn, Honorable Alexander, then Honorable Scott.
Thank you, Chair. And just to echo my colleague's comment, thank you very much to everybody who presented to us. My question is around COFI, and now that COFI is gone through cabinet and is now in the ambit of the committee, is actively before the committee, the timelines that FAIS Ombud's alignment into the NFO is no longer theoretical, and what is the FAIS's Ombud's current state of transition and readiness? What specific milestones must be achieved before we can amalgamate this all together? And also, most importantly, that this is done in a way that doesn't disrupt any of our consumers. Thank you, Chair.
You, Honorable Alexander, Honorable Scott.
Thanks, Chair. Mine is on ASB in terms of the accounting standards and how do they work with AGSA in terms of dealing with the interpretation wherever there are disputes, so that you do not have AGSA for at times being threatened to be taken to court. So we are able to make sure that at least in terms of interpretation, we are at the same level, particularly your ASB and your GSA. So I want to understand how do they interact, but also in terms of how does ASB reach out to ensure that there is a promotion of a good governance, particularly at various institutions in the country, to make sure that at least we are able to, improve on their accountability. The other one, Chair, is on the pension funds adjudicator in terms of the complaints that are there. Because we have, yes, there are complaints in terms of those municipalities that might not be contributing the pension portion to where they're supposed to be going. But my issue is, Chair, how do we resolve these issues? Because I've not seen at any stage where a municipality or those that are accounting officers in municipalities are hauled to court or to jail in terms of the actions that they're taking, because this has got huge impact in terms of workers' contributions. And I just want to understand, how do they deal with that? Is it that they just write letters, call them, make follow-ups, and say you are not to what extent can the pension adjudicator, pension funds adjudicator go in terms of remedying the situation in terms of the contributions? And here we are talking of percentages in terms of how they would like to see improvements and so on. I would want to understand in terms of the impact. So we not only talk numbers, but the impact in terms of those issues that they've dealt with. Yeah, I think I'll leave it there. Thank you.
Thank you, Honorable Scotty. Let's go back to the presenters and check if you have got a question to respond to. Let's start with the Accounting Standard Board, ASB. Is there a question for you to respond?
Yes. There is, I think, Chair. So I think two questions. So the first one is, how do we interact with the National Treasury to resolve interpretation issues? So we do have a process in place that's been agreed between the National Treasury and the Auditor General to resolve disputes. And as an entity reporting to the Treasury, we support them in terms of advising on if there are interpretation issues or matters that need to be clarified regarding the standards, then we will provide input into that process. We are quite conscious of the dispute process that exists and I guess inconsistencies in application. And if we do hear of any of those, we would raise those with the National Treasury or with the Auditor General. We do have quarterly engagements with them, so we do try and minimize those interpretation differences. But if it's really at the case where it's a rather large dispute where there's unlikely to find resolution between just the National Treasury and the Auditor General, then we would assist the National Treasury in that process. The second question was about us promoting good governance at entities. So our role, I guess, is really to make both preparers and users understand how they can use the financial statements to hold officials accountable. And through our end-term evaluation that we did, we surveyed a number of stakeholders, and it isn't entirely clear that people know how to do that at the moment. So the slide that I put up last about the Citizens Guide, although it's called the Citizens Guide, it's actually meant to be more widely used to understand really, if you are seeing things in the financial statements, why are they there and what should you do with them? So I would urge you to have a look at the last slide of my presentation. You can either follow the link or use the website that I've indicated there. It's a new initiative for us, which is really about getting people to understand why the financial statements exist, how they can be used. There's some tips there that you can use to ask basic questions. So it's not directly good governance, but we're really, I guess, facilitating the decision-making process to have good governance at organizations as well as in the broader society. So I think that's our role. We do also have, to support the preparers in particular, our ASB YouTube channel. If there are sort of any matters that require support or guidance, more education material, we have all of that within our YouTube channel, and that's really our two primary things. The other one is the Knowledge Hub that we have with the Treasury, but that's a bit more at a granular level. So I would really say that the YouTube channel for preparers and the new Citizens Guide is how we are promoting good governance amongst preparers and users. Thank you.
Thanks. FAIS Ombud, any question for you?
Yes, thank you, Chair. Just two questions quickly in terms of how we're reaching out to rural communities. Yeah, Parliament did raise and the committee did raise this with us last year, and we certainly have gone all out to try and improve, or trying to make sure we're getting to the rural communities. We've put up billboards in more rural towns. We've been going out to a lot of functions and joining in a lot of functions in the rural towns, and we actually have seen the fruits of that. We've actually seen a decrease proportionally in terms of Gauteng and the Western Province originating complaints from those two provinces, the major ones, and KZN, and a corresponding increase in the smaller provinces. So we're also keeping statistics now on where the complaints come from, small towns, metropolitan areas, and so on. So we have a better idea, and we've definitely seen a huge shift there. So I can assure the members that we have ongoing projects to promote ourselves to the rural communities, and it's working. There's no question of that. We'll report on that in our annual report as well. We will give feedback on that. And then in terms of the state of readiness of the FAIS Ombud for amalgamation, yes, that has been an ongoing project for our office. Together with the Ombud Council, we hold regular meetings with the NFO in terms of aligning our processes, aligning everything, our staff, how we do it. So just a few practical examples. We now title and describe our complaints process and our case descriptions exactly the same way the NFO does. So it's seamless there. So when you read ENFO information, read ours, you can understand exactly how it matches up and how and you can understand the comparison. So that we've definitely done. In terms of staff titles, we changed staff titles to align to the NFO, so it's clearer. And then when we amalgamate, there'll be a better understanding of how the staff integrate. So yeah, together with the Ombud Council, we've done a number of steps to make sure that when alignment comes, it will be as seamless as possible. And I'm pretty confident so that we will be able to do it. And as I say, regular ongoing meetings with the Ombud Council and the NFO make sure that we're on track with that. So I can assure the members that, yeah, a lot of work's being done, and I'm confident that we're on track with it. Thank you, members.
Thanks. Let's move to the next stakeholder, Ombud Council.
Thank you, Chair. Two questions I'd like to expand on. The question around the participation and accessibility in rural areas. Just to add that the consumer awareness efforts of the Ombud Council also specifically focus on supporting awareness efforts in broader ranges of communities. So also awareness outreach activities, etc., in rural communities or smaller towns and provinces other than the major metros have been a key focus of ours. And we do also require the schemes to provide statistics to us on geographic spread and insofar as they are able to have the data on rural access. Just on Honourable Alexander's question around the FAIS amalgamation, just to bear in mind for the committee that because the FAIS Ombud is a creature of statute, an Act of Parliament is required to disband the office of the FAIS Ombud. So that is the piece of legislation I mentioned that is being worked on, being the Financial Sector Ombud System Amendment Bill, is in process, and a task team comprising members of the National Treasury, the FSCA, the Ombud Council, and with some World Bank support, has been working on informal consultations on early stages of a draft bill, but good progress has been made, and the intention is that once the COFI bill is close to finality or is finalized, the next step in the Ombud reform will be to consult on this Ombud System Amendment Bill, which is a dedicated bill to entrench both that amalgamation of the FAIS Ombud and broader aspects of the reforms. So that work is in progress. The exact timelines of that are, of course, dependent on the National Treasury and the work of Parliament, but we are hopeful, we are planning to have that bill ready so that as soon as an appropriate legislative window opens, that will be the next step. I also mentioned that one of the APP deliverables of the Ombud Council for the current financial year is to assist the National Treasury in developing an actual concrete transition plan for achieving that transfer of responsibilities from the FAIS Ombud to the NFO. And as Advocate Simpson has mentioned, in the interim, the Ombud Council is supporting ongoing coordination and streamlining and as much alignment as possible and information sharing and cross-training between the NFO and the FAIS Ombud in order to make that transition as seamless as possible. So cannot confirm precise timelines because there are legislative dependencies, but everything we can do behind the scenes is in progress. Thank you.
Thank you. The next stakeholder is the pension funds adjudicator.
Yeah, thank you, Chair. There was one question for me in relation to the non-payment of contributions involving municipalities, and how the PFA deals with these things and how we're remedying the situation. And a comment was made that we have not seen people being hauled to the courts to answer for their sins in respect of those unpaid contributions. And I think the point of departure is to acknowledge that Section 13A issues are a big problem. And as I usually say, we've actually crossed a threshold of a crisis where Section 13A contributions are concerned, because if you look at what the FSCA has said, I think last year, there's about 7.2 billion in outstanding contributions that are owed to retirement funds. And that's a huge amount if you think about it. And this was as at last year, September. Obviously, that figure might have changed depending on how successful recovery is or recovery efforts are. But also if they're continuing failures to pay contributions. So it's a big problem. And we're starting to see it not only in the private security sector and contract cleaning sectors where it traditionally was, we're seeing it now in local government as well. But we need to remember that the office of the adjudicator is a creature of statute and it can only operate within the confines of the law. The law says that we must receive a complaint, we must investigate it and make an order which a court of law would make. So how we're remedying it is we get complaints, we investigate them, and then we make an order. The important thing that we also need to remember is that the Pension Funds Act says that the responsible people, the directors, the boards who are running these businesses or who are running these companies that fail to pay contributions can be held personally liable for the payment of those contributions, and that they can also be criminally prosecuted for failing to pay contributions. And what the adjudicator has done to make sure that that happens is we've made orders against people who are responsible for running organizations for them to be held personally liable for contributions. And I think that it's probably an indication that we need to give it more media prominence so people know that this thing can be done. We do hold directors personally liable. But also, if specifically in the case of municipalities, if you look at the court judgments, I just can't remember when this decision was made, whether it was last year or this year. But in the matter of the Municipal Workers Retirement Fund versus the Mafube local municipality, it was a matter had by court of law where action was taken to hold the CFO, the MM, and the mayor personally liable for payment of contributions which were deducted and not paid over to retirement funds. And in that case, the court actually held them personally liable for the non-payment of those contributions. So it does happen. I think maybe the moral of the story is that we just need to give these things more prominence so that the public knows that it can be done. So Chair, that's my response on non-payment of contributions. I know there was a remark that was made around transformation, but I'm taking it that it was only a remark, that it doesn't require substantive response from myself. Thanks, Chair.
Pension Fund Administrator. I think we're done with the first round of presentations and questions and comments. Let's move to the next item and invite the FIC to present. FIC, 20 minutes. Over to you.
Good morning, Chair. Let me introduce myself. My name is Thabiso Titi. I have just been recently appointed as the director of the FIC. And let me just take this opportunity to thank the chair for inviting us as the entity and the members of the committee. I am accompanied by my executives from the FIC. Chair, I am 2 weeks into the job, and I'm still in the transition, and I'm on a co-pilot with the former acting director who have done a sterling job, Mr. Peter Smith. If Chair would allow me to hand over to Mr. Peter Smith to give the committee the strategic direction as to where we're going as the FIC through the presentation of the APP and the reflection of the strategic development plan. Thank you, Chair. Mr. Smith.
Thank you, Mr. Titi, and thank you, Mr. Chair. Good morning to honourable members. Let me just see if I can share my presentation. Can I confirm whether the presentation is visible?
No, it's not, Peter.
Okay, let me see. Is it visible now?
Yes.
Thank you, Mr. Chair. So in the presentation, we'll just spend a brief few minutes on the background to the FRC, the operational plan, and the background, the mandate, etc. And then we'll spend a bit of time on the targets that we've set for ourselves for the 5-year strategic plan and how we've translated those into the 1-year annual performance plan for the coming financial year. And we'll just mention a few concluding remarks on the matters that drove the decisions for the development of the strategic plan and the performance plan for the coming year. So as I said, just to make sure everyone is on the same page, the FIC is a statutory body. It was established under the FIC Act. That means we can only do what the Act allows us to do, and we have to operate within those legal parameters of the founding legislation. The FIC has been around since 2002, and we've started operating in 2003. So the FIC is now in the year of celebrating its jubilee. It's the only entity in South Africa that is mandated to process financial intelligence and support the law enforcement community with the information that is received from the analysis of transactions that take place in our financial system. It's funded by the national budget. We have a line item in the National Treasury's portfolio, which means we're entirely dependent on the fiscus for our funding. And we'll maybe say a word or two about that at the end of the presentation again. The FIC is not allowed to conduct investigations, and I think this is an important point to keep in the back of members' minds, because this is often something that people confuse with the mandate of the FIC. So what we do is to identify proceeds of unlawful activities, identify people or financing activity that may be involved in or implicated in terrorist financing or proliferation financing. And we contribute in this way in combating money laundering, terror financing, and proliferation financing. Proliferation refers to the proliferation of weapons of mass destruction. We are also mandated since about a year ago to produce forensic evidence which may be used in criminal proceedings and may be involved in the prosecution of people that may be suspected of money laundering, terror financing, etc. We engage to a large extent with external partners. The FIC does not achieve its mandate on its own. We are entirely dependent on the usage of the information that we produce to achieve the outcomes that we are looking for. This means that the FIC has to also maintain very strong relationships with our partners, both domestically and internationally. I think just a final point on the protection of information. This is a very important aspect of the FIC's work, both within the FIC and downstream for recipients of information from the FIC to maintain the security and confidentiality of the information in the course of the investigations that may follow. So then turning quickly now to the 5-year strategic plan. And I think at the outset, we want to make sure that we are clear about what it is we want to achieve with a 5-year strategic plan, but what is the impact we're looking for. And this is to ensure that our financial system has the adequate controls built into the system to produce the information that the FIC requires to work with, to produce the financial intelligence that we need to, and for that financial intelligence to be effectively put to use by our downstream partners, such as the investigating authorities in the Hawks, etc. So we're not only looking at what the FIC will be doing, but how we can impact the work of those around us in improving the integrity of our financial system. We've broken this down into 5 outcome areas. The first relates to the effective supervision of compliance with the FSCA Act. Compliance produces the information we require to work with, and that is a starting point of our operating model as we see it. Then we aim to consistently produce high-quality financial intelligence that will be used in the work of our law enforcement partners and prosecuting authorities, and a number of other entities that have to rely on financial intelligence when they discharge their own mandates in terms of their own enabling legislation. This has to be supported by a continuous cycle of re-evaluation. So we continuously look to improve our operating environment where we can make recommendations on future legal legislative amendments or improved policy implementation as we keep track of international developments, best practices, international standards, etc., that impact the work that the FIC does. And this must be underpinned by good corporate governance. In other words, the FIC must be an efficient as well as an effective institution and must operate according to the highest standards of good governance and clean administration. We've integrated the new aspect in production of forensic evidence into the FIC's work, and this is bringing the FIC closer to the investigative process, although we don't actually conduct the investigations yet ourselves. And we've set ourselves in specific targets on the integration of this work while we are also building out this capacity with a view to reach full implementation over the next 5-year period. This means for the FIC, in terms of outputs that we have to achieve, is constant advice to policymakers on the changing environment in which the FIC and our partners operate, increase the levels of compliance with the FIC Act in the financial sector especially, and also very importantly as a new extension of the FIC's work in non-financial private sector institutions that have to comply with the FIC Act. The delivery of information that must be used in the criminal justice system is an area of continuous improvement for the FIC. And when we speak about some of the targets, I'll point out some of the new targets that we've added in this area. So over the 5-year period, as far as supervision is concerned, we aim to entrench our ability to conduct risk-based supervision. And this relies at the outset heavily on information being supplied to the FIC by entities in the private sector that have to comply with the FIC Act. So we've set ourselves targets over the 5-year period for the rate of submission of this information to the FIC and the use of this information to analyze risk in our especially our non-financial sector, and identify the institutions that should be targeted for closer supervision from the FIC on a risk basis. This also implies that we will conduct more outreach to these institutions, especially institutions that have not previously been closely supervised as banks, for instance, or for other financial institutions might have been. So we've set ourselves a target of around an average of 12 such sessions per year over the next 5 years. Very, very important for us is the amount of active supervision that the FIC will then apply on a risk-based approach based on the outcomes of this risk analysis work that we will be doing. And here we are targeting an average of light touch reviews of around 240 per year and more intrusive inspections that may lead to sanctions and enforcement actions of around 600 per year. This will be ramped up over the 5-year period so that we've maintained this average over the looking back from the 5-year period. The consequence of the supervision is then improved compliance, and here we are looking at achieving 100% continuous target for the implementation of follow-up actions that need to be implemented by institutions that have been inspected or that have been subject to enforcement action, and especially to apply the remedial actions that are required to improve their compliance with the FSCA. The purpose of this form of supervision is not necessarily to punish and penalize, but to encourage improvement in compliance and better results in future for these institutions that have to follow remedial plans. And we then aim to also improve our success rate in the implementation of sanctions, especially where the sanctions decisions of the FIC would be challenged on appeals, and we will then have to engage in litigation processes to defend the decisions where sanctions are imposed. Turning to the utilization of our information, we have set ourselves very ambitious targets on engaging with our stakeholders outside of the FIC. In other words, not just looking at what we do to produce the financial intelligence, but also how we engage with the law enforcement agencies, the prosecuting authorities, etc., and the necessary awareness that needs to be created on the usage of the information that the FIC will be producing over the 5-year period. So we've set ourselves their targets of mandated training for entities that receive our information and training for the actual people that will be handling our information that we pass on to our investigative partners. We are also looking at expanding the ability to produce strategic intelligence reports, and this is a new target. This is not something that the FIC has ventured into in the past. We've been focused very much on tactical intelligence that is used on a case-by-case basis in ongoing investigations. But the strategic intelligence reports are intended to identify developing trends, emerging risks, things that we need to then point out and bring to the attention of policymakers and decision makers to base future policy. Then on the targets to deal with the continuous improvement of our operating framework, the FIC intends to remain responsive to all developments in our area over the 5-year period. Any new best practices emerging that we need to translate into policy, or new developments in international standards that may impact legislative changes, to produce the necessary advice and input on developing the necessary responses. Then to maintain our and sustain our efficient operating environment, and in particular in this area to maintain our technology roadmap and the development of the technology tools that we require to stay ahead of the curve in the information that we have to produce, and to do that again as efficiently as possible. When it comes to the production of the forensic intelligence evidence, we intend to remain in line to produce forensic evidence in every instance where the FIC is requested to become part of an investigation process where this evidence may contribute to an investigation. Then if we look at the annual performance plan, and this is what we've set ourselves to achieve over the next financial year. The FSC has set ourselves the target to increase the number of compliance and awareness engagements in the supervision area over the next year. And this is particularly because we are dealing with entities that have not been closely supervised for compliance with the FSC Act in the past, may not be as well aware of what their obligations under the FSC Act are. We're talking here about non-financial institutions such as lawyers, estate agents, gambling institutions, etc. We then also have set ourselves a new target for the issuing of guidance products to these institutions on understanding the compliance requirements of the FSC Act that apply to them. I've mentioned the increase in risk-based inspections and compliance reviews, and those we've set ourselves the targets to analyze the information that we receive from the accountable institutions in the private sector, and to do our risk assessment and identify the entities that will be inspected over the course of the year. And based on those inspections, we've also set ourselves in a target of the reports that will be issued and would be considered for possible administrative sanctions, remedial actions, etc., that will be applied to those institutions. In the area of the production of our financial intelligence for the coming year, we've increased the targets for the output of financial intelligence from the FRC in high priority matters and medium priority matters. These targets relate to the information that the FRC identify based on our own analysis of the information reported to us, and which we then identify as potentially worth further investigation, and then pass this on to investigating authorities or the Revenue Service or prosecuting authorities for further action. We've also set ourselves the target of maintaining our response rate to requests for information from our stakeholders, and to maintain that at a 100% level, given our capacity to process these requests. And the target to increase the number of reports related to illicit financial flows. These relate specifically to matters that are under priority investigation relating to, for instance, cross-border financial flows, illicit mining, etc. And here we've also increased the target for the output from the FIC. As I've mentioned, the strategic intelligence is a new target for the FIC, and we've set ourselves a target of achieving at least 10 of those this year, and we will then ramp this up further over the next 5 years. And these are reports in which we intend to make available to policymakers, etc., to base future decisions on adjusting our AML, CFT, our money laundering and terror financing environment around the FIC. As I've mentioned, we've been very much looking at focusing on engagements outside of the FIC and targeting engagements with our stakeholders. And we've increased our targets here for both the analysis side and the forensic capacity side to engage with the users of our information to ensure that they find our information useful, where we need to make improvements, that we get the feedback from them. Or where they need further assistance and guidance in the usage of the information, that we are able to provide that over the course of investigations and prosecutions. We aim to maintain the target to block funds on request at 100%. We've been able to do this for the past few years, and this is one of the most disruptive aspects of the FIC's work, where we can intervene and stop financial flows that are suspected to involve proceeds of crime. We've increased our targets to produce forensic evidence. As I've said, we're in the process of operationalizing and entrenching the forensic capacity of the FIC, and especially in the instance of using these forensic products as evidence, where the FIC will be testifying as an expert witness in criminal investigations or criminal prosecutions or asset forfeiture cases, and where we may contribute information on financial flows that support those criminal process activities. In terms of our operating environment, again, we intend to maintain our targets for the coming year of providing technical assistance within our region on the implementation of building up institutions similar to the FRC or improving money laundering counter-terror financing systems in our neighboring countries around our region. We intend to stay engaged with policy-making activities of our standard-setting bodies and assessing bodies, and to implement financial sanctions that emanate from the United Nations Security Council within a 24-hour period to reduce delays and the possibility that money may dissipate. We also intend to maintain a monitoring view of the implementation of anti-money laundering and terror financing policies and to report on that to the National Treasury and the coordinating bodies there. As far as our operating environment is concerned, we aim to maintain our targets here on, achieving an unqualified clean audit report, maintaining our employment equity and employment of designated racial groups, people living with disabilities. And in all of these areas, we intend exceeding the set targets in terms of the relevant legislation. And we intend to maintain the target of 100% payment of invoices within 30 days. That's a set target for public entities, and we intend to abide by that. And then to maintain our uptime of our ICT systems, which is the enabling platforms for the FIC to operate and the platform for all our engagement with the private sector and law enforcement agencies. Finally, just a few words on why we've come up with these targets and what has informed our decisions on these. In the recent past, the FIC's mandate was expanded to include the production of forensic evidence, and we've integrated the targets in our planning to make this business as usual for the FIC and to start reporting on the achievements and performance against that. And in the same vein, also the FIC's mandate to become the anti-money laundering terror financing supervisor for non-financial institutions that have to comply with the FIC Act. And again, this has been incorporated in our targets as business as usual. We have identified that there's an increased demand for information from the FIC, and this demand is continuously expanding in terms of the range of institutions that want to make use of FIC information, financial intelligence information. That is also reflected in expanding the range of institutions and in amendments to the legislation that govern the FIC that may receive this information from the FIC. All of this requires a significant focus on maintaining and expanding our technology platforms and our capability to support operations from a technology point of view. FIC is an information-rich organization, and to process the volumes of information that the FIC manages in all aspects, the supervisory aspects and the financial intelligence aspects, it absolutely requires a continuous focus on improvement in technology. This is not something that will ever end as far as the FIC is concerned. So in a nutshell, what we aim to achieve over the 5-year period and with this annual performance plan is an improvement in the information flows within our criminal justice law enforcement system relating to money laundering, terror financing and proliferation financing, both among public authorities, bringing together authorities such as revenue service, investigators, prosecutors, etc. under one roof. We do this, for instance, in a fusion center that is hosted by the FIC, and also strengthening our partnerships with business and with the private sector, and allow the exchange of information between authorities and the private sector to flow more effectively. We continue to to focus on high priority matters, and we really take our focus here and emphasis on priorities that are set by our law enforcement partners in their own strategic planning processes as well, the likes of the Directorate for Priority Crime Investigation, for instance. We are in a cycle now, just about to start off the next round of evaluation by the international standard setting bodies and assessor bodies, of which South Africa is a member, namely the Financial Action Task Force and the Eastern Africa Anti-Money Laundering Group. This process will officially kick off in July this year and will run until October next year, when the report will be discussed and adopted. So this will again impact the work of the FSC and all our partners around us, from the policymaking side in the National Treasury through to prosecuting and the asset forfeiture side in the law enforcement environment. And the FIC will be closely working together with our partners and providing support for the coordination of this process. There is a new General Laws Amendment Bill in the pipeline. It has passed Cabinet recently, and the National Treasury will be managing the legislative process of the tabling of this legislation, and it will probably then be considered by this committee in due course. And again, the FIC will be playing a supporting role there. Just a final word on our funding position to execute this plan. Our funding position for this current year originally involved an allocation of around 500 million rand to execute the plan for this particular financial year that we are just starting. In the final revised allocation, this was reduced to just over 480 million, and the same reduction also applies. It's about a 1% reduction for the coming financial year ahead of us. These reductions mean that the FIC will have to be much smarter and cut our strings much thinner in the way in which we use our available resources to achieve the outcomes of these that we've set in this performance planning. Especially in light of unexpected inflation rates, increases in operating costs that we are facing at the moment, it will mean that there will be increased demand on the resources of the FIC to do more with less. But we remain confident that we will be in a position to achieve the targets that we've set for ourselves on the basis of the planning that has been done over the past few years. I will end there, Mr. Chair, and hand back to the Director. Thank you.
Thanks, Chair. That's the presentation by the FIC.
Okay, and like I did with the PFA, let me welcome you, Mr. Titi, and congratulate you on your new responsibility. You are welcome.
Thanks, Chair.
Let's proceed to FSCA. Over to you.
Thank you very much, Chair, and good morning to you and to the honorable members. With your leave, Chair, I've just asked a colleague to help share the slide, to drive the slides while I present. I'm here with the leadership of the FSCA, ex-colleagues and some divisional executives. I'll present, and then we'll all make ourselves available to take any questions that the committee might have. The presentation will cover, as we've outlined on slide 2, an overview of the organization, just our mandate and our purpose, and the Twin Peaks framework. And then we'll talk to the strategy of the organization, 2025 to 2030, just at a high level. And then I'll spend some time on the APP for this financial year. Talk a little bit about our resources and how we are funding the strategy of the organization. And then I just thought it would be probably pertinent to talk to the coffee bill, our readiness for its implementation, what we see as its envisaged impact going forward, given that it's a very topical issue that other colleagues have also touched on. So to kick off, just to recap our mandate, which the committee is very much familiar with. Established in terms of the Financial Sector Regulation Act as the dedicated market conduct regulator in the financial sector in South Africa. This was in 2018 at the implementation of the Twin Peaks in the country. And the key components or aspects of the mandate of the FSCA, and in no particular order, these are not ranked in terms of the law, to ensure that markets operate with integrity and efficiency, and both of these quite well defined and well understood concepts, the concept of market efficiency and integrity. The second component is fair customer treatment, and the law outlines what we need to do in terms of ensuring the delivery to this outcome. And then we maintain, will contribute to the maintenance of financial stability. Both the Prudential Authority and the Conduct Regulator are enjoined in the law to contribute to the outcome of financial stability. So that's really a summary of the mandate of the organization. So work very closely with the Prudential Authority. That's what is envisaged in terms of Twin Peaks, to make sure that we apply as regulators an integrated kind of lens to look at risks to the financial system from both a conduct and prudential perspective. We are held accountable by the Financial Services Tribunal, as many of the other regulators that spoke here referred to their work. So the tribunal is basically an independent mechanism to review and sometimes replace our decisions. And it's quite important, their work, because it helps to just test and challenge our regulatory decisions, and obviously to provide those that are aggrieved by our decisions with a recourse mechanism to sort of challenge those decisions. So that's that on the tribunal. So to just give the committee a sense of the scale and scope of the regulatory perimeter of the FSCA, we regulate, I think, on this slide, more than 20 institution types, more than 13,000 licenses. So that's a really diverse and a very wide range of financial institutions. And this diversity makes it critical for us to have a very risk-based approach, which the law also requires that we should have, but also have very proportional supervisory approaches, and also in terms of how we take enforcement, because we don't have unlimited resources. That was quite important for us to focus on high risk, high impact institutions in the way that we regulate and supervise and take enforcement action. That's just what to put up this slide to give you a sense of the scope. In terms of our organizational structure and governance as an organization, so at the top leadership level, it is the executive committee. So that's comprised of the commissioner, myself, and currently 3 deputy commissioners. We then have 11 divisions in the organization, which are responsible for the key functions of the organization as outlined on the slide. And the divisional executives report through to either a deputy commissioner or the commissioner directly. And that's the sort of leadership structure, the executive leadership structure in the organization. And we, in terms of governance, we are also supported and anchored by governance committees, which really play a very important role in strengthening independent oversight and accountability in the organization, and to make sure that the decisions that we also take have got that independent check. There's two of these governance committees, the risk committee and the remuneration committee, that are appointed by the DG of the National Treasury, while others are appointed by Expo in terms of the Financial Sector Regulation Act. But all of them are run very independently from the organization. On the next slide, very central to the work of the organization, given the type of organization that we are, is the people, our people, the staff of the FSCA. We currently just have just over 700 employees, steady growth in the last 5-6 years as we've gotten to have more responsibilities in terms of twin peaks. We've needed to build capacity in the organization and make sure that we are able to deliver on the mandate of the organization. And as we must, we continue to invest in training. We also provide bursaries and internships, which are very important in just building pipeline and developing skills and expertise that are relevant to the work of the organization. So that's just background and context in terms of the work of the structure of the FSCA. Now moving to the strategy itself of the organization. We have 5 core strategic objectives. We've had these for the last 5 years, and we've also decided that they're still very, very relevant for the next while. The first is to improve industry practices to achieve fair customer outcomes. So this anchors a very important part of our mandate. And as you see here, the objectives linked directly to the kind of outcomes that we want to see. So we want to see the mitigation of conduct risks in the financial sector, and we want to make sure that customers are treated fairly, and that this is properly embedded across the financial sector. We also have a big focus as an organization that we've had for the last 5 years and are intending to continue with, which is to act against misconduct. And the focus here is visibility of those actions, to make sure that enforcement serves as a deterrent in terms of what kind of behavior and outcomes we want to see in the sector, and that builds trust and confidence, which is important for how the financial sector should operate. The third is promotion of innovation, inclusion, sustainability, and through that's how we deliver on objectives such as transformation, competition, and sustainability in the sector. The fourth is to empower households and small businesses, and the big focus of this, the mainstay of this strategic objective, is our financial education programs, our literacy programs, capacity building initiatives as well, that make sure that households and small businesses can make better informed financial decisions. And the fifth is really about how, as an organization, we see ourselves, continuous improvements on ourselves being more responsive, more responsible, more sustainable. And it also anchors the work that we're doing as an organization to transform ourselves in terms of our digital transformation strategy, which I'll talk to in a short while when I talk about our IRS model. So that's the key strategic objectives of the organization, and these are supported by key priorities that we have identified. You can move on to slide 11, Tindani. So what's important about these priorities is that they really help us to translate the strategy into more tangible kind of initiatives that we drive in the organization, which enable the achievement and execution of our strategy. For example, if you talk to coffee readiness, this is about making sure that the organization is ready for the new consolidated and expanded conduct framework, which is going to be really high impact in terms of both the sector and the kind of expectations we have on the sector on how they deliver on conduct imperatives, and for us as an organization to be ready to drive those outcomes in terms of how we regulate, how we supervise, and therefore how we drive these outcomes. The integrated regulatory solution, the IRS, is about ensuring that we modernize as the FSCA to improve our use of data, to get ourselves to a position where we are a much more insights-driven regulator and supervisor, enabling much more efficient and technology-driven supervision and even enforcement actions. And the one of the things that are very close to that is our risk-based supervisory model, which really is us wanting to have a much more scientifically based basis of how we think about risk profiles of institutions, risks that we see across the sector, so that we can be really a truly risk-based and proportional regulator, focusing, as I was saying earlier, on higher risk institutions and activities, and a much more structured kind of oversight across the financial sector. So these are the priorities, therefore, that help us to deliver on that. Slide 12 and 13 actually are just more detail to what I've already spoken to, which is our 5 key strategy focus areas. So I won't spend a lot of time here. I think maybe just to highlight the focus that we will have on strengthening conduct standards and supervision to make sure that they talk to the realization of fair customer outcomes across the sector. So the objective is to embed, as I was saying, fair customer treatment and more visible, timely, and decisive enforcement. I've already spoken to that as well, and the work that we're doing to drive greater innovation in the sector, greater contestability, a more inclusive, transformed, and competitive financial sector where we can make a contribution. And then to drive financial literacy, we've got a financial education plan which details the kind of initiatives that we're putting in place in the next while to drive better empowerment for households and smaller businesses specifically. And as I've said, to build institutional capacity and capability for the FSCA to make sure that we continue to be an effective and a responsive and a modern regulator in the space. So maybe we can then move to the APP itself for this financial year. The targets of our APP very much aligned to the strategy of the organization, as I've just outlined. And these include implementing our regulatory and supervisory plans, which give a bit more color to what we will do from a regulatory frameworks perspective, but also in terms of what our focus will be in terms of supervision of financial institutions, the different institution types that I was outlining earlier. We also have got specific targets with regards to enforcement, with targets such as expecting 90%, us executing about 90% of administrative sanctions, and making sure that we complete at least 75% of investigations within required timeframes. And I think it's important to just outline here, investigations are varied and diverse. They depend on the nature of the issue that you're investigating, the complexity of the questions that you must look into, and therefore, while we always try to deliver within required timeframes, sometimes complexity just requires a little bit more time so that we can be thorough, depending on what the nature of the investigation is. And then, of course, to drive sustainable finance outcomes, transformation initiatives that we have in terms of our plan, and as I was saying, some of our key financial education programs, such as the speech competition and Money Smart Week. But we make sure that we can deliver on those and make sure that the kind of reach is also continuously increased and expanded as the organization is able to in terms of our capacity. And we remain quite committed as an organization to maintaining clean audit outcomes, effective stakeholder engagements, being out there, engaging on our work, engaging on the issues that are being raised in terms of what the societal expectations are of a conduct regulator. And of course, which is the bread and butter to continuously engage with financial institutions themselves so that they can better understand what expectations we've got in terms of conduct outcomes. So that those are sort of highlights in terms of what we are targeting to achieve. And then to talk to the funding and budgets for the organization. The 26-27 budget reflects a revenue of just over 1.2 billion for the year, expenditure which closely resembles that. And we have been for a long time in a very healthy situation in terms of reserves, cash reserves, so that if there's a shortfall, we're able to fund that from internal resources. We don't need to necessarily borrow. And just to emphasize, I mean, I know that the committee is aware of this, the funding basis for the FSCA are the levies that are raised from the financial institutions themselves. That's the funding model for Twin Peaks. And it ensures that we can deliver our mandate independently, and of course, while making sure that we can maintain financial sustainability and good governance for the organization. So that's that on funding. So maybe to just spend then a few minutes, Chair, on the coffee bill, just its purpose and what it delivers on for us. Very important piece of legislation for the FSCA, and I think for the entire financial sector, actually. So Cabinet, you'll be aware that it's recently been approved by Cabinet and is currently going through the certification process. What it does mainly, I think, so sort of three main things. The first is that it consolidates the market conduct legislative framework across the financial sector, which is really important, and it is also an opportunity to modernize and to update important aspects of the market conduct legislative framework. So that's what it does. And it really delivers on this idea of an outcomes-based approach, which we've been talking about for a very long time. So no longer the focus on ticking boxes and compliance, but really to focus on what the outcomes are, how do customers experience their interactions with financial institutions at various levels of interaction. And that's what the coffee bill talks to. And I think it really strengthens customer protection in the financial sector, delivers on objectives such as inclusion and competition. So it's a very, very helpful development, and we're looking forward very much to engaging the committee and the public on this when we support the Treasury in shepherding through. And I think quite importantly, in terms of how we think about the work of the organization going forward, the coffee bill expands our regulatory perimeter quite significantly, but it also enhances coordination, particularly for dual regulated entities. I think a thing of maybe interest is also the incorporation of some high impact or sizable entities, such as some public sector pension funds, into the regulatory perimeter of the FSCA, so that as we modernize and hold ourselves to having a world-class regulatory framework, we don't have these big institutions that are not part of that in terms of how we think about regulatory outcomes going forward. So from a readiness perspective, we're doing a lot of work here. So preparations are, I think, at a relatively advanced stage. We are developing conduct standards which are aligned to the coffee bill framework. We're also aligning our supervisory approach to what the COVID bill envisages. And what we are thinking about is a phased transition plan that we will obviously engage with the sector and the affected stakeholders on. We will have a readiness roadmap which will guide how we think about the full transition into the COVID bill world once the bill is enacted. So that's what we're doing to sort of ready the organization for COVID bill implementation. And as I've said, given its impact on regulatory scope, it will require investment in terms of upskilling and capacity building in the organization. I think it will require the same for the sector as well, and it will place additional demands on systems and processes of the organization. As I was referring earlier to the work that we're doing with the IRS, it's the biggest investment in terms of systems. It's a back-end system that really already envisages the world as it should be, as it would be under the COVID bill world. And we're doing all of that so that we can ready ourselves. And obviously that's got budget implications in the short to medium term, but we're very comfortable that it's money very much well spent. So I think this is my final slide, Chair. Happy to pause here. And as I said, we will make ourselves available for questions and comments afterwards. Thank you.
Thanks, Mr. Kamlan, for the presentation. The next entity is the DBSA.
Thank you very much, Chairperson, Dr. Maswanganye, and members of the Standing Committee on Finance. I'm David Makura, the chair of the board of the DBSA. I am here with the executive management from the DBSA. The CFO is going to present on our behalf, is Zodwa Mbele. We also have with us the group executive responsible for infrastructure delivery. I need to table the apology of our CEO. The DBSA is hosting today the Deputy President on the African World Heritage Day event here. So she was receiving the Deputy President, but we are ready, Chair, to present what you have asked us to present. The first thing I would like to say is that it is well known to this committee, to you honorable members, that the DBSA is a development finance institution that focuses mainly on infrastructure delivery, focusing on infrastructure, the different infrastructure subsectors that the CFO will touch on, principally in South Africa, but our mandate, our legislative mandate, also covers the SADC region and the rest of Africa. Most of our focus infrastructure projects are in South Africa. 60% of those are in South Africa and 40% are in the rest of the continent. That's our legislative mandate. We focus a great deal on local government infrastructure, which is also an area that you have asked us to speak to, and the rest of the issues, Honorable Chair, that will be covered by the CFO. Thank you very much for the opportunity to present our corporate plan to you. The CFO is ready to do so.
Thank you, Chair. Let me just get straight into the details of the presentation. My name is Zodwa Mbele, as the chairperson has already introduced me. I will just move on straight to where he left off in terms of our mandate. There's no change from the previous engagement in terms of where we play as a bank. The first part, you would note that there's plan that we undertake as a bank. And this is what we call the non-lending of the bank, where we finance, basically we offer grants to municipalities to assist them to do the infrastructure planning and the assessment and the bulk infrastructure advisory type of work that we advise them on the back of later to finance that infrastructure and unlock funding from National Treasury. And then we move on to the preparation stage. This is where we talk about lending, where we also provide funding that is returnable back to DBSA in order to prepare projects that have got an opportunity to be recovered or to be bankable. So that's where we refer to project preparation. And the financing, the third pillar, which is what we are known for, providing finance, different instruments to different institutions, including the municipalities. And the build and maintain, which is number 4, this is where now you will also relate to it, because it's where we undertake projects like the parliamentary refurbishment that we are undertaking, and also maintenance of infrastructure for different departments, like Department of Basic Education. We do a lot of work for that, and the public works and where it's necessary on other social infrastructure, Department of Health. So the chair had already covered our sectors as well as our geographical mandate. I think what it's important is just for me to move on to the next slides, because I think those are self-explanatory. So if we move to the next slide, show why it's not moving. I'll talk to it in the meantime.
Hold on, can you hear me? Is it me who has a problem to hear the voice of the CEO?
There's a problem.
It's fine. Is it fine now? And
Yes.
Is it fine?
Yes, we can hear you.
Okay. So thank you for that. So we are on the strategy on the page for the bank. We've started talking about our vision as a bank, that we really want to see the Africa that is prosperous, that is also less reliant on donors, as we had seen previously with some of the African countries, which were kind of very much dependent on donor funding, but we want to be more self-sufficient and also be free of poverty. So that's really the mission of the bank and the vision of the bank. And with respect to the mission, how do we achieve that? We continue to extend the development finance that will enable us to accelerate the development impact for the benefit of the region. And this is why we talk a lot about the regional integration in our discussion. It's not only South Africa that we look into. If you think about projects that we finance, we get water. South Africa gets water from other countries, like in Lesotho. 5 of the provinces benefit from the water that comes from Lesotho. So it's very important, as we always talk about DBSA, we have that regional integration, and we talk about Africa, especially the sub-Saharan Africa, less of the northern part of Africa. And then we move on to, I think the values are quite self-explanatory. With the goals, there's just 4 goals that we have mentioned there. Financial sustainability is very key. Whilst we know that without financial sustainability, we cannot advance the development impact. We also know that our financial sustainability can be limited. So we do need to have smart partnerships, partners that we can collaborate with in order to leverage their balance sheet to advance more development finance. And importantly, we also look into inward looking in building the future fit DBSA to accelerate development. So that's more inward looking. And then we look into the growth areas of our strategy. We have a very ambitious strategy to grow the balance sheet 3 times. And for us to achieve that, we obviously had to look into how we would grow this balance sheet. What are the growth potentials out there? And we know in South Africa is one of those countries that have so much inequality. So it's important as a bank that we play a role where we can advance funding that will ensure that it drives the inclusive economic recovery. We do that by making sure that there's Black participation in the infrastructure development. The IPP program, for instance, DBSA is one of the largest lenders to the BEE tranche within the IPP portfolio. So it's very important that we advance that. And obviously we do that. You'll note that with the next slides, with the IDD, like the parliamentary construction, BE plays a key role in participating in such infrastructure other than in the lending sector. I think he alluded to the strategy. With respect to Africa lens, we don't look at South Africa, but holistically, we really like to advance funding to projects that will integrate South Africa with other regions, like the border post projects. If you think about such projects, they are quite key for us to participate in. And also, the green growth opportunities, as we all know, I mean, I've alluded to renewable, it's a very easy program to relate to when we pursue green growth opportunities and other new areas with respect to green growth. We believe it gives us an opportunity to advance our footprint with respect to the development impact. I think what I've kind of touched on the operational excellence, so I won't repeat that with respect to the growth areas. But I think what is important as well, we want to make sure that we leverage the power of technology in order to advance financing as well as the development impact. So I think that's just one area that you should be aware of. We need to also empower municipalities to be able, to reach out to DBSA through the digital platforms. And then the strategy outcomes, the kind of, what coming from the growth areas and the objectives, they are also kind of self-explanatory. I think the point that I wanted to emphasize is the capable and strengthening municipalities. The bank spends, we have a portfolio of about 110 billion development finance and development loans. Of that, almost 40 billion, close to that, is with respect to municipalities. So the bank spent quite a lot of amount of resources, not only financing municipalities, as I said earlier on, we also provide grants, which is not returnable, in order to plan the infrastructure. We also, for the plan, provide grants to ensure that there's asset care, there's revenue enhancement. There's no amount of resources that is spared when it comes to municipalities. And you'll see as we talk about our integrated municipal approach, how we really slice and dice the municipalities. And the reason why I focus on municipalities is because it's quite unique in the sense that munis delivers not only the economic growth, if you think about the roads, water that they need to deliver, but also it's also important for the quality of life of the society. So if the municipalities are dysfunctional, there will be no economic growth to speak of. There will be no quality of life to speak of in that area. So it is important. Unlike when we talk to ESCOM, yes, it's an add-on, but there's also more the social angle when it comes to the municipality. Hence, we also focus our attention so much to the municipalities. And if you allow me to also kind of mention, the governance would like me to mention all the time, the sound governance and operational excellence. They remind us that we need to say DBSA is where it is because of the sound governance and the operational excellence. We also know that it can make or break the institution. Moving from this slide of the strategy on the page, which I think I tried to really accelerate because it's quite detailed, we move on to the next one slide, which talks to how do we try to really balance the two. It's quite a very tricky balance because we need to be financially sustainable. At the same time, we need to advance development impact. And when I say this, if you think about municipalities, you would even wonder, how do municipalities pay you? Because we know they are dire financial situation. So for us, we have to wear the cap
of both achieving what is it that we can assist the municipality with such that they can we can recover money. And when we advance funding to municipalities, in most cases also, we try to unlock the MIC, which is the Municipal Infrastructure Grant from National Treasury, on the back of which will be paid. At the same time, when if you were to look at the municipal entity itself, from the financial sustainability point of view, you may find that it may not meet all the requirements, but we can also do other things to ensure that we unlock funding that can refi or repay DBSA for us to be sustainable from both the financial aspect and the development financing. So it's important that we understand. Similarly with the triple BEE, the Black participation they don't have balance sheet, see them for as a DBSA. Otherwise, if we were to go by that, we will not be managing to achieve the development impact, but we might be good with the financial sustainability because we're strictly sitting on that. So we always need to strike that balance of the two. The two should be equal all the time. I think moving on to the our annual performance plan, which is 2016, 2026, 2027. I think the key ones, we've emphasized the financial sustainability. As you can see, the outcomes, the core measures, how we are measured with respect to that, and the quality of the disbursement, the quality of our book. Once I talk about the financial sustainability and the development impact, but it doesn't mean that we lend recklessly. So it is important that once we have huge and ambitious targets of disbursing, meaning the money that gets to leave the DBSA to the projects, it's quite sizable, but it's quality disbursement. If it was not quality disbursement, you would see that DBSA will struggle financially. But where we are solid as an institution because we also apply our mind to the quality of the disbursement that we book out. The other development impacts that obviously we care about, the development outcomes are very much important. You'd also see that we talk not only the jobs that are delivered, that are facilitated in South Africa, and also through the IDD, the project implementation. We also care about the number of Black transactions that we book in the system. We care about gender mainstreaming. We also care about the just transition. We play a role, we keep an eye, in what is happening with Mpumalanga, for instance, with the decommissioning that is happening in respect to that, and the role that we play through our project preparation facilities. And I spoke about smart partnership. This is where we tap in smart money from the global institutions that are geared to address the climate facilities. Some of them, they provide grants that you can deploy to such opportunities. So it's important that we also look into that. I think the next one is more the enablers. The next slide. It's focusing on enablers, which is really inward looking to ensure that we can deliver as a bank. It's important in how people receive the bank and the stakeholders that we care about. And the last part talks to the governance and the compliance, which I've already overemphasized. There's zero tolerance on all these, the irregular expenditure as well as the fruitless and wasteful. We can then move on to the development results, which is and the municipal value chain, which I had already kind of indicated earlier on how we measure really the performance of the bank. It's not about rands and cents. It's about the impact on the ground that I've already alluded to. The learners who are benefiting from the school so that I have been refurbished. How many learners will also, benefit from the sanitation facilities in rural areas, similarly with the BE that I've mentioned earlier on through our IDD, as well as how much we also unlock with respect to the SMEs and the jobs and the youth in particular. So we do really, when we build Parliament, it's not about the brick and mortar, but who else, local development, the participants and the training into the new skills that we also care about leveraging our infrastructure build, making sure that we also achieve that. Earlier on, I had alluded to the integrated municipal support program that we integrated approach for the bank. As I said, it's not only the financing part of it that we care about. We also, we've been at the municipality. I don't think there's any institution in the country that I'm talking the financing institution that understand municipalities like DBSA. Even the banks, they look up to DBSA to understand how do we continue to advance funding in the local municipalities at the metro level. So at any given point in time, we also pivot and adapt our strategies to address certain gaps that we see in the municipalities. And this time around, we are focusing on the integrated approach, where we bring the lending aspect, the non-lending facility, which is a grant, to unlock funding from the MIG, because to unlock grant funding, you need to also prepare the business case, which municipalities in most cases they have no ability to do so. So the funding that we provide, which is the grant funding, is to get the consultants to assist them under DBSA supervision. And once the funding is unlocked for funding, also we benefit from, in some cases, with the IDD also assisting with the municipality. So you can see that we approach this municipality from a very integrated approach aspect of it. And we came up with this, what you call partner districts. So we then said, let's also identify certain districts. There were about 8 that were also willing coalition who came on board, wanting to be assisted by DBSA to partner with. So, and this is how we deal with those 8 district municipalities on how we go about it with respect to that. And I think it's important that strengthening the governance of the municipality is one of also the key performance areas that we always need to emphasize, because we, as I said, we're not reckless. We also look into how are they dealing with the audit outcomes? How are they addressing the gaps that the AG would have raised? So we really look into holistically. And when we say, and I know people will wonder, why 8 district municipalities? Because we needed also to be effective, we go deep, rather than to spread too thin and not be effective. With the 8 that we have selected and who came on board, we wanted to go as deep as possible so that it becomes a viable case that we can showcase and benefiting that area. And the approach, obvious of it, it's that district level. So these are the themes that come out of it, which I kind of already, obviously we go, as I said, it's a willing coalition who comes on board. They share their areas of weakness, obviously local economic development also, they know the area better than we do, but we do have all the arsenal to assist that district to go deeper in order to make a huge change with respect to this partner district. And then moving on to the last slide, yeah, I think so. If I'm still on time, I can see it may add if there's still time. But these are principal risk. I don't think it's a big issue with the principal risk. The cyber attack remains high because we always keep it red, and not because of anything, but because the cyber attackers are always ahead of everyone in the game. So you always need to be vigilant and have processes that try to mitigate that as much as possible. So with respect to the outlook now, again, DBSA is where it is because of the strong leadership under the leadership of the board, who always continue to guide the DBSA. As a result, we have always obtained the clean audit opinion and unqualified audit as well since inception. And again, our growth in the balance sheet, the quality of the book that we put in our book makes the bank to be financially resilient. And also we continue to access funding. I mentioned the smart partnerships with source funding everywhere in the world as a bank. And again, the part on the just transition and the ESG that we look into as we land into infrastructure. Digital transformation is becoming quite top of mind for the bank and as a priority in order for us to be agile in servicing our client, as well as also to advance our impact, as well as the growth strategy. And that is thank you so much, Chair. I'll hand over to Chair now.
Chair, that is our story. Our CEO has completed the business I referred to earlier, and she's joined us, but we are in your hands, Chair. That is our story.
Okay. Thanks very much, Chairperson. Our colleague, Mr. David Makura, and your executive from DBSA for the presentation. Colleagues, there we are. Questions and or comments on the presentations that we have received. Let me identify hands. I see Honorable Van Rooyen. Over to you, Honorable Van Rooyen.
Thank you very much. And let me start also by welcoming the presentations. I'll go straight to DBSA, Chair. In the interest of time. 1 second. Going to their presentation, I've realized that they are using a range targets instead of fixed targets. I'm not sure what informs this method of setting targets. You know, I'm raising this because from a parliamentary perspective, it's always difficult to measure any entity or institution's performance if range targets are utilized. Maybe if we can get more information as to why they are using range targets instead of fixed targets. And then secondly, when you go to Annexure A of the presentation, it shows some worrisome growth in terms of international loan book, more especially when you deal with impairments provision. Now, my specific questions around this trend is that what are the main drivers of this impairment in the international in the DBSA international loan book, and also it will be important for us to know which countries or sector exposures are the main drivers of impairments in the international loan book. And then thirdly, how does, because we are all concerned about the unfortunate changes that are taking place in the geopolitical landscape. Now, because we are exposed, DBSA is exposed at 40% to outside the country. How does the current geopolitical changes impact on this the 60-40 exposure model? And on jobs, highly appreciated because we understand the execution of massive projects with a potential of job creation, of course. One would like to know how do disaggregate these jobs? Maybe how many of them are permanent, because the figure that is given here is just not giving that information. Permanent jobs created, temporary, but also direct and indirect, you know, and also because they are also covering the DLabs related jobs. Maybe that information will help us to understand how impactful are some of these infrastructural projects executed under the ambit of DBSA. And last year, we have seen in the recent past some major projects where issues of safety for our workers, or maybe for workers, is not taken serious. More especially on these big infrastructural projects. You know, I think the recent example is the one of I think there was something that happened in Monday in Johannesburg South, but before that there was something that happened also in the Western Cape. You know, what is the DBSA approach to safety of those who are participating in the construction of these big projects? You know, because I know the simplest way of approaching it, that is very, very common in most areas, is outsourcing that to those who are appointed to execute on these projects. What is DBSA responsibility in that regard? just to make sure that as they create these jobs for our people are safe, they are working also in safe environment, but they are also safe as they build these massive projects. Thank you very much.
Thank you, Honorable Van Rooyen. Honorable Squati.
Thanks, Chair. And let me join my colleague in welcoming the presentations as made. Chair, I'll start with FIC in terms of the role that they're playing in combating illicit financial flows, particularly in terms of the information that they're generating. Because previously we have been asking as to how does FIC go beyond just generating the information, but also making sure that the information is utilized to combat illicit financial flows. And I wanted to check as to whether is there any intention to expand the mandate, because I think that has been the question even previously, so that they are able to as well be able to go into investigating other areas where they believe or suspect that there should be some unwanted, activities. Yes, understand that they are working with other law enforcement authorities, particularly prosecutorial authorities. Now, as they continue to, supply that information or share information with those law enforcement prosecutorial authorities, what is the impact? Do those authorities have enough capacity to utilize the data or the information that they have been given? And what has been the impact so far? Because I understand that they are also training some of those institutions in terms of the use of the financial intelligence reports. But is there any impact in terms of the information that has been gathered or the information shared with those authorities? And to what extent has it gone in terms of impacting on their investigations? And Chair, in terms of the capacity, are they, because FIC says that they're utilizing, they're also working with SARS. Are they not able to perhaps look at the, utilizing some part of the technology that SARS is dealing with to make sure that they're able to close the gaps, particularly in terms of the capacity that they're trying to build that relating to that 18 million or the 1% cut, which has cut them thinner. Secondly, Chair, is my question is related to FSCA. In terms of their use of or the incoming, perhaps let me leave it until the coffee bill is enacted, and we might be able to talk about it, because I wanted to talk it in relation to the regulatory framework around the rating agencies. But let me just leave it there, and we'll perhaps in future we'll deal with it. Now, Chair, perhaps let me focus on the financial technology solutions or the fintechs that are in operation, particularly within the financial sector. And direct the question to Tate Kamlana as to what is, since this financial sector, financial technology solutions are playing a crucial role in terms of the financial sector landscape, where we have seen more banks acquiring these fintechs. And what has been the impact, particularly in terms of lowering concentration and competition in the market, so that we do not have this banks just gobbling all these fintechs, and you then do not necessarily have any competition landscape remaining within the sector. And secondly, Chair, to Dati Kamlana, is whether they are convinced that the financial sector organizations have structured their fees in an affordable manner relative to, in relation to other jurisdictions. But also noting that they are generating more fees from the net fees and commission revenues. Is it fairness in terms of the fees that are being structured within the market? The last one, Chair, would go to DBSA and salutations to the Chair, Dr. Makura. I'll be asking the Chair, but it will be answered obviously by the CFO. In terms or in relation to the role that is being played by DBSA, particularly at the local government level, which we appreciate so much. However, we have not seen a lot of improvement in terms of these municipalities. I'm not sure, perhaps there is areas where we can be shown that in terms of the interventions that the DBSA has played, we might be able to see or in their future, we might be able to see improvements and progress that has been made. And we have been making a call to National Treasury that it must empower DBSA so that it can continue to play a major role in terms of infrastructure development in the country. And I'm saying, as we are making that call to empower or to strengthen DBSA to play a major role in infrastructure development generally in the country, can we also see DBSA strengthening its role in terms of municipal infrastructure within municipalities, but generally in terms of the integrated municipal support, as they are saying? Because we have seen that there is generally a breakdown in terms of the relationship between citizens or ratepayers within various municipalities and those municipalities, and there's clearly no communication whatsoever. Whatever the municipality does, it does its own things, and citizens do their own things, and there is a breakdown in terms of communication. And what kind of measures is the DBSA coming with, so that as you coming up with that integrated municipal support, you are also able to take the views and the aspirations of citizens into whatever support that we are bringing, so that we are able to be relevant to what the citizens are actually saying. I mean, there is a lot that can actually be done to as well build those bridges between communities and the municipalities, so that we are able to have a community support at the local level, and make sure that the municipalities are also able to respond positively and in time towards or are being responsive towards the citizens' aspirations at the local level. Because I think there is that breakdown which we are not really mending. And as well, how far is DBSA ready to play that major role in terms of infrastructure development? I mean, we know that infrastructure is actually one of the major areas in terms of making sure that we're able to turn around the economy, but also we are able to create that enabling environment for economic development to take shape within the country, so that we're able to grow the economy. So I would want to understand how far, what would be the capacity required, and how far are we ready to play that role within our mandate. I'll end it there. Thank you.
Thank you, Honorable Scotty. Let me just ask one question for clarity. How does the DBSA complement, or how do DBSA and IMSA, is it IMSA? There is an organ within COCTA that deals with infrastructure at the local government level. So how do the two complement each other? Thanks. Let's go back in the order of presentations. FIC, please respond to the questions.
Peter, you may proceed with the policy question on the mandate and legislation. And Max, can you please come in and talk to the technology roadmap? Thank you.
Thank you, Director. So yes, on the issue of expanding the FIC's mandate, that is a policy question that is not entirely within the FIC's hands. It is a decision that would have to be taken at national government level, and particularly within the National Treasury and the Ministry of Finance. This issue was raised in the past a few times, and also in discussion with the law enforcement agencies, police and the DBSA, etc. Because naturally that such a decision will also impact the broader policies in the law enforcement space on who's responsible and mandated to investigate crime, etc. So at the moment, there are no immediate plans to expand the FIC's mandate in the direction of becoming responsible for undertaking investigations. But we are certainly working on the process of becoming closer to in the ongoing investigations and involving our information, and especially the development of the evidence in the forensic accounting space that will support those investigations. The impact on the illicit financial flows and the FIC's role, if I may just also touch on that, we reported in our last annual report on the FIC's actions to coordinate communication and information sharing between the different law enforcement agencies. So not only the information that the FIC shares, but also that other agencies will share with each other. And in that sense, we convene an interdepartmental working group on illicit financial flows that includes the likes of the DBSA, the Revenue Service, Financial Surveillance Department of the Reserve Bank, the FSCA, and a number of other entities that have all different roles and as perspectives on the issue of financial flows. This work has led to some cases coming under investigation. At the time of our last annual report, there were 10 cases under investigation, and 2 of those have proceeded to prosecutions. So that work is yielding results as well. Just a last word on capacity of our partners and our law enforcement agencies. And I think as all entities in the public sector, capacity is a challenge for all of us. And we've seen this, especially in the area where skilled expertise is necessary in conducting financial investigations, conducting the type of forensic accounting investigations that are often required to deal with these complex illicit financial flow matters. And that is particularly one of the reasons why the FIC is building up that capacity within the shared forensic capacity in the FIC as well. Thank you, Director. I will end my responses there and hand over to yourself or Max. Thank you.
Max, can you come in on the sharing of technology, the regulations around our collaboration with SARS?
Yes, thank you, Chair. We do partner and collaborate with SARS quite a lot as FIC in the operational work that we do in terms of tackling AML, CFT, or tax evasion. Operationally, we do a lot of them. Secondly, we partner with SARS quite a lot, particularly when we go into the new technologies of 4IR, the AI and machine learning. It's at an advice level where, yes, it can be said that we do save learning costs of trying a lot of things, but by getting their input in terms of advice on how to go about various things, and that helps quite a lot. We have also had a project that we are implementing now, which is a cash courier reporting, where we are using SARS infrastructure to receive reports on travelers that leave or enter the South African borders with cash, using their infrastructure of a traveler declaration system, which saves us and saved us a lot from as an organization. However, this can only go so far. There is still a lot. There's a lot that we need to invest in infrastructure, so that we are able to use the advanced technologies to be able to undertake our work as in totality. Yeah, thank you, Chair. I think that's the response. Thanks.
Thanks, Chair. From FIC, we're done.
Okay. Thanks, FIC. FSCA, come on.
Thank you very much, Chair. So let me start with the question on fintech and competition and concentration. So the work that we have been doing on fintechs and supporting their growth and development has been anchored in what we refer to as the IFWG. So this is the Intergovernmental Fintech Working Group. That's basically where we have sort of hosted the leadership of the work between various regulatory authorities to support fintechs having access to the innovation hub and giving them in regulatory sandboxes an opportunity to test many solutions, which have been very effective actually in sort of driving innovation and competition in the financial sector. And many of the solutions that they've been able to test have actually been targeted specifically at underserved markets. So we think that strategy has been effective, and we are continuing to invest in that approach. I think, though, with the best intentions in the world, before they get to the level of scalability where they can really take on established and large financial services players, their impact on competition outcomes, I think, for now is still limited. That is my observation. I think the next frontier of the work around innovation is open finance, and we're working together with the SARB and the Provincial Authority in this area, because what open finance does is to basically enable a wide sharing of financial information with authorized third parties. And we think that if this is done well, it can really materially reshape competition outcomes in the financial sector, and with very good outcomes for inclusion as well. Better competition, better pricing, and better disclosure, more personalized and more data-driven products for financial customers, and better financial inclusion outcomes as well. So that's what we are investing energies towards. That's what we think that will accelerate innovation and competition in the financial sector. I think the question of concentration in the financial sector, one has to understand its genesis, the evolution of the market structure especially in banking. If you think back to the Asian crisis and the rand crash of the early 2000s, 22 banking licenses were returned to the SARB. What that meant was that existing banking institutions had to take over others, instantly reshaping the market structure and really shooting up out of kilter the kind of concentration levels that we have in South Africa. That evolution is very relevant when one is thinking about what to do to sort of solve for the problem of concentration. Having said that, we think that the sector is still fiercely competitive. We think that the interventions such as the Innovation Hub, regulatory sandboxes, and some very innovative solutions from fintechs have really served to shake up how the sector thinks about solutions and products for financial customers. And we think the outlook, therefore, for competition outcomes is positive for the sector. On the question of fees, so our approach to fees has been to drive better disclosure. And of course, what I've just spoken about now around open finance actually is also very important for better pricing, because it's important for better product design as well, so that consumers can compare products between financial institutions and also have better abilities to switch between financial institutions, because the lowering switching costs is very important to drive competition outcomes in the financial sector. So disclosure is a very important part of that. The more people can see what fees they are being charged and for what, and the better that they're empowered and enabled to then switch between financial institutions if they're not happy with the fees. I think that is what eventually materially drives down the kind of fees that you see being charged in the financial sector. So that's been our focus: better disclosure, driving innovation, and driving, therefore, better competition outcomes. And all that will drive eventually, we think, fees down. Financial education, of course, a very important part of that approach, was the more people know what questions to ask and what to look for and what they can require of financial institutions, then they can make better informed decisions around the kind of products that they then acquire from financial institutions. So that's been our focus and approach on sort of fintech and innovation and the question of competition in the financial sector. Thank you very much, Chair. I'll leave it there.
Thank you, FSCA. DBSA.
Thank you, Chair. Thank you very much, Chairperson. We have the questions that come from the two honorable members who responded. Firstly, our CEO, Ms. Witumelo, is here. Witumelo Musako is here. She will deal with most of the questions raised, including on municipalities, especially, and the breakdown on the jobs, issues of geopolitical risk and the impact of that on us as the DBSA, the issue about how we set our targets, and also just the experience we have with working with municipalities. I will come back later to deal with Honorable Squati's issue around whether there's something more we can do with municipalities. I'll come back to that, but our CEO will lead that. And then on the issues of worker safety on construction sites, which is essentially what the group executive responsible for infrastructure delivery, Tshweni Rampela, who is here with us, he manages all that. He will deal with that question that was raised by Honorable Van Rooyen. And the CFO may want to say something on the impairments, which is an important question also about the actual geography of that that breakdown. So CEO, over to you. Thank you, Chair.
Thank you, Chair. Good afternoon, honorable members. On the first question of range as opposed to specific targets, we are embarking on, we have developed a very ambitious decadal strategy for the bank, where we are implementing a growth strategy. Now, to ensure that we continuously reset the base from which to work from, we are providing a range of targets so that we then give ourselves an opportunity to grow as we embark in the implementation of the decadal strategy. I will give you an example. For instance, if you look at the target that we, the low level of the target that we have set for the 2026-2027 year, it's the low level is at 20 billion. Last year, our target was just over 15 billion. So we are targeting quite ambitious target, where you're looking at a more than 20% growth in terms of the base. So to allow ourselves to grow at a systematic basis and build confidence in the process, we have then agreed that let's give ourselves a range while we on an annual basis then review. And I think that we will come to a time where we have built adequate confidence to then set just one target. But for now, in building confidence in actually, driving this growth strategy, this is the direction that we have adopted. It will also enable our board to adequately measure the outcomes of the strategy going forward. The next thing I'm going to touch on is the question on the international loan book. Yes, the countries that have been impacted are those that are currently going through a debt restructuring under the G20 common framework, and that's namely your Zambia, Ghana, Ethiopia, and that is public knowledge. We are in the process of finalizing those arrangements. But what gives us confidence is that those countries are starting to see a turnaround. We see growth out of Ghana and out of Zambia as well. When it comes to how we then account for that impact, we have very robust ECL processes within the bank, where we then have models that then determine the level of expected credit losses that we should be taking. In the event that we are seeing more risk than envisaged, we then have overlays that we then add on to make sure that we are adequately provisioning for this risk. We have provided adequate provisions to measure the level of risk that we are seeing in these countries, and we are of the view that we are adequately provided for. Now, and this also links in. I mean, when you look at those countries, for instance, there's exposures to the sovereign. There's also private sector that we have supported, and what you're seeing is payment, coming through from the private sector, and also once some of the facilities have been concluded, then we will see payment coming through there as well. Currently, our ECL percentage as a bank is just below, just above 3%, which is actually exceptional, considering the level of risk and our mandate as a development finance institution. When it comes to the global, before I go there, the 60-40 is the target range that we have agreed with our shareholder. Currently, in terms of the split, the 70%, 70-30% split, where 70% is South Africa in terms of the book, and 30% is the rest of Africa. So the key messaging here is we are seeing improvements in the risk profile as these countries finalize their negotiations and the economies improve. When it comes to the global landscape, and we are seeing an increase in fuel prices. We have done a preliminary assessment in terms of what that impact is going to look like on the quality of the book. We are currently in the process of our audit, and we have the opportunity in that regard to ensure that in determining our expected credit loss as at the end of this financial year, we take those matters in calculating our portfolio impairment by, for instance, adjusting of the weightings when it comes to economic forecast. We are also doing the annual credit reviews on the various exposures, and there the detail is then coming out as to what is the level of provisioning that we need to be doing. We do have systems and processes in place as an institution to ensure that we have adequate, we provide adequately for that. When it comes to jobs facilitated, we have jobs facilitated within the construction space, where there's direct and indirect jobs, with the DLabs program that we have, and also with the projects that we then fund. So those at every project level, an assessment is made on the jobs that are going to be facilitated, both direct and indirect jobs, and these are then continuously monitored and reported on accordingly. The last thing I'm going to touch on before 20 then comes in is on the municipalities. Yes, we are not seeing the level of impact, because one of the things that is key in the municipal space is collaboration. Firstly, there was a question on MISA. MISA is a special purpose entity that was actually created within the DBSA to provide technical support to municipalities, which then grew and developed to be a separate entity and run on its own. We do collaborate with MISA extensively on the technical support that we provide to municipalities. What we have adopted is a collaboration model, when you look at the partner district, we embarked on this journey about more than 2 years ago. The CFO did touch on the 8 districts that we are working with. One of the key outcomes that we have seen coming from the work that we have embarked on, we're currently looking at a pipeline of projects that we will be developing to the tune of about 2.5 billion coming out of Jotabi, Lijwelepuza, Namapa districts, just to mention a few of those districts that we are supporting. I'd like to emphasize the words that the CFO used in her presentation. It's willing coalitions. And it is key to know that we are working with districts that would like to see improvements in the livelihoods of their citizens, that would like to see economic activity for their citizens, and that is the premise on which we develop these relationships. This integrated approach, as mentioned with a partner, a district has also identified areas where we can enhance our value proposition as the DBSA in providing support to municipalities. Before, we emphasized a lot on planning and unlocking infrastructure for migrants that was touched on earlier. What we have identified as part of the work that we've been doing on partner and district is the necessity to provide project preparation facilities, and that's what we are then enhancing the value proposition for these projects so that they can be packaged and reach to a point of bankability. What we are looking forward to is actually doing more of this work to a point where we will even be getting the private sector involved in some of the projects that we will then develop. I do welcome the members' comment on advocacy to the National Treasury on how we can collaborate more with the creation of FISA within which is a collaboration with the National Treasury and DBSA and GTech. We will be seeing more projects being developed and also coming through. And we would also like to see more collaboration where we have already proven ourselves within the IDT space in terms of project implementation, where strategic projects for municipalities that unlock economic value. For instance, we have the opportunity as DBSA to then take those on and build so that we can unlock the opportunities. The last thing I'd like to mention is we had usually provided technical support to under-resourced municipalities. So that would be your secondary cities and your more of your rural municipalities. What we are looking at now, we have seen that gap at the metro level, and looking at as part of a partner with the metro initiative to provide technical support accordingly. We are part of the Metro Trading Services Initiative that the National Treasury is driving, to drive improved access to services in the metro space. I think I will end there. I'll just hand over to Tweni to touch on the OHS.
Thank you, Sio. Greetings, honorable members. Just also maybe to comment on the issue of the districts, because the question might be, but 8 districts. Those 8 districts are actually covering 50 municipalities. Those 8 districts are covering about 50 municipalities. That's just to augment the point that the CEO has been making. But on the issue of safety, DBSA, we take safety on our sides as a primary and a critical issue. And that's why, in observance of the OHS Act of 1993, we ensure total compliance, and that's why we've adopted a three-level level approach. And in terms of the projects as we undertake them, you'll have an honorable member is correct to then say, and then we'll have the consultants that we have. Then we'll have a safety consultant as has been required by the law for the sake of ensuring that the site is approved for construction. And that is the first part. That's the first line. And the second line is basically at the contractor level. We insist that there has to really be an OHS person at the contractor level. And that particularly they are conducting the daily safety practices and ensuring that the PPE that is required is basically intact. And at the third line, within the DBSA, we have our own OHS agents that particularly are doing the site audits and also beginning to look at the risk audits, and just to ensure that at least the total loop is basically connected. So we take safety very seriously. So, and that's how we're really dealing with the issue of safety. And that's why mainly in terms of the projects that we've undertaken, we really have registered quite a very low numbers of those incidents. That most of the incidents that are there, they were maybe just first aid incidents, and our reports are quite very clear and they speak for themselves. Thank you so much.
Thank you, Chair. May I just conclude our side by saying that the board, from the board's point of view, this issue raised by Honorable Squati about the DBSA strengthening, doing more, basically doing more with regard to supporting municipalities is something we have been discussing. We have had a discussion at the board strategy session, but it's following through at every board meeting. We're following through on that. Our message essentially is that we have huge challenges of service delivery, and the infrastructure story is extremely negative in our country. Yeah, the DBSA is doing a great deal of work here at home and in the continent, but we want to really provide this sustained support to our municipalities, because we have identified that as an area of our biggest challenge. So the issues that have been raised that we need to do more is basically what we say to management all the time. This program called Partner a District goes together with Partner a Metro, as the CEO was saying now. Metros are easier to provide support to. Yes, they have huge infrastructure challenges. They are easier to provide support to. Districts often have huge constraints. They have very limited technical capabilities. With the metros, the problem is different. And I just want to leave you with the fact that there are issues, Chair, that the DBSA will do. We will pay a lot of attention to providing technical support to municipalities, including project preparation and providing financing. But our experience is that there are things that cannot be solved by an institution like us. And we often say, even when we talk to you as Parliament and our shareholder, our ministers, that instability in municipalities cannot be solved by institutions like the DBSA. There's lots of instability, including coalition instability. In fact, the board here is very worried that that instability may triple after the elections. So that we want to leave that with you. Our teams come across those issues face to face. So we're able to sort out, provide financing, but if the political instability is something that the DBSA cannot deal with, and if we have an opportunity to talk to you to say that we are doing a lot, we are upscaling, we are responding, we are providing support to municipalities, we are shifting more disbursements to to municipalities and departments domestically. But this issue of political instability in local government is a matter of great concern for us. We want to leave that with yourself, Chair. Thank you very much for all the issues that you have raised with the DBSA team. Thank you.
Thanks, Mr. Makura and the executives. Before I make closing remarks, let me check if ever we have announcements from the Secretariat.
Thanks, Chair. It's tomorrow, continuation briefing by entities. Colleague Tebogo will send the agenda and presentations for tomorrow's meeting. Same time, 9 to 1 virtual. Thanks, Chair.
Thanks very much, Alan, for that announcement. And let me thank honorable members for their inputs and also being available despite so many competing programs in Parliament, and the support team for organizing this meeting. Let me also thank the entities that report to National Treasury and also account to the Standing Committee on Finance for the thorough preparation of tabling the APPs and the Strat plan. Thanks very much for that. I think there is a good story to tell from the presentations that we have received today. There's a lot of good work that is done by entities. Like we have raised the issue last week when we were at PIC. PIC is doing a lot in this country in terms of investments. But some of those that are doing, we don't know. Even myself, as a member of Parliament, I did not know until I was exposed to some of their very big projects, like Mainland Main, Mainland Mall, and many others. What we were exposed to sometimes was their challenge in regard to daybreak and also other problems at Lanseria. And the good story is not being told of their good work. And the same applies here. I heard Mr. Kamlana saying that FSCA has got reserves of $1 billion and so on, or so much millions. All the time what we hear, the narrative is that state-owned enterprises are collapsing. Just one incident sometimes at SAA or ESCOM, it will be like every state organ is collapsing. The good work that all entities that have tabled here should be communicated. Here, when I drive on the N1 bypassing town on my way home to Malamlel, I see a very big hospital being constructed with the partnership of DBSA, Department of Health, and I think Limpopo Province, and the university. So a lot is being done by entities that are reporting to Parliament. Last time we had the challenge of pensions. There are lots of municipalities and other employers who are not investing on the pension of the employees. And PFA, for instance, has done a lot to identify those culprits, and something will have to be done. So let me emphasize that you should also invest in communication. Don't be like a church and you preach a religion that people will see. You are not a religious body. You are an entity of government that reports also to the South African public. So, and there's nothing like over-communicating. So the more you invest in communication, the more the public becomes aware that South Africa is not a failed state. Because I see sometimes on the television news, somewhere written, is South Africa a failed state? And you ask a question as to how does this question arise when there's a lot of good work that is being done by men and women out there. So we get distracted by such bylines and headlines and ignore the good work that is being done. Of course, more has to be done, more especially by big entities like DBSA, which is infrastructure driven, to create jobs for young people. You can see there by Parliament. It's pleasing. There are so many young people that have been employed to rebuild Parliament. And you ask yourself, once that building is completed, what's going to happen to these young people? Will they be going back to the street, or they will be absorbed somewhere? So if we can have more and more of big projects like the hospital in Polokwane, parliamentary building and other buildings or projects of those nature, you can see more young people being employed, because youth unemployment is a serious challenge to this country. Unless you don't have a family member who is graduating or graduated and doesn't have a job, you will not understand the impact of unemployment. You see, now we are in the season of graduations. So many young people are graduating, and they call you as a member of parliament. Tate Maswangai, I've just graduated like a day before yesterday. I spoke to one who has got a BCom, what accounting. I've graduated with BCom accounting. Where can I get a job? It's so heartening. Sometimes disheartening to hear such stories. So let's do more to create jobs, build the economy, participate in making South Africa a real developmental state. And we don't only congratulate only the board and the executives. We also congratulate men and women out there by DBSA or FSCA or wherever, who are doing groundwork, cutting grass, cleaning offices, making tea. They make the institutions to tick. So going back, tell them that we recognize what they are doing, because sometimes such people hardly get recognized. I was pleased the other time to attend the award ceremony of SARS. Annually, they have got a ceremony of awarding, awards, prizes to the best performing, starting from the lowest level. And I hope yourselves, you are doing that to motivate your workers. If you are not doing that, please introduce award ceremonies to acknowledge the good work that people are doing. So we can't always be talking bad when you come to parliament as if you are a bunch of failures. When there's good work that is being done, let's acknowledge that. So thanks very much. As we have said the other time, that we'll keep on visiting the entities. Last week we were at SARS and PIC. We'll be knocking at your door in the second round of oversight visits. Thanks very much, colleagues from entities, members, support teams, media, and everybody who's in attendance. The meeting is adjourned. We'll meet again tomorrow.